All right, everybody. Well, the man of the hour is here. Scott, we appreciate you being here. We kind of came in and just did a little intro, told everybody about number one, how you're a cool dude, but number two, that you have a very straightforward approach and that they're definitely in for a treat. There's been tons and tons of feedback. I was up until past midnight last night emailing all you guys back who emailed us about the video, but people love the Trading in Open Spaces video. We've got a huge crowd in the room, and I know we're just about to get started here in about 20 seconds. And so, Scott, we appreciate you being here, and we'll turn things over to you. You guys should be able to see Scott's screen, and so just want to make sure you can see his screen there.
Yeah. Okay. I can see it. Great.
So I will turn things.
Let me get this recording going. Okay. Let me start the recording. We always record if we're on live. So if you want to ask the question, is this recorded? Yes, it's recorded. All right. Now, let's see. All right. Turn the volume up. Okay, I can do that. How about that? Good. Okay. All right. There we go. All right. Fantastic. All right. Let's get this show underway. We're going to do the disclaimer first, so hang on, everybody. Everybody, this is Scott. Welcome to the New York Session Live Training Room. Don't forget that trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade foreign exchange, you should carefully consider your investment objectives, your level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest any money that you cannot afford to lose. Be aware of all the risks associated with foreign exchange trading and seek the advice of an independent financial advisor if you have any doubts. So, welcome to the best live trading room in the Forex, bar none. All you got to do is ask our traders. So a couple things you need to know. Forex Target Trading LLC is the educational part of our business model. It's the methodology that we use. ProAct Traders LLC is the technology part of our business. It's the software that we use. So we combine the methodology with the ProAct charting software to create our results. And our results are taken from actual traders using the combination above and then averaged for our pip capture. Now, since many traders take only 2 or 3 of them and other people may take 2 or 3, it's virtually impossible for you to match our record unless you took every single trade and you never slept and you traded every single market, all 3 markets. So don't think that you can match the record. It's just a running total. So in other words, this is our trader's record, not my record. My record doesn't count. Your record's what counts. Things to know. We are trading setups, not trades. Any decision to take a trade is yours. We are training what an RF1010 or a 6 aces trade setup looks like in a live trading environment, not after the fact. So I may say this is a valid RF1010 setup. Enter when ready. That is a trade setup, but it's not yet a trade. You, emphasis is on you still have to look for T30s, any previous support or resistance, any fib barriers that are in the way today. You must assess the risk and reward. You must know the target and you must know the stop loss. If you don't know the target and you don't know the stop loss, you are not a trader. You are a gambler. Wait for a hook or a center, and if everything is right, then you make the decision to take the trade, not me. So stops are always going to be the technical stop. We may say the stop's around 110.12. You must use the technical stop, which is the last support or resistance, depending on your direction, plus 5 to 7 pips on a number that ends in a 3 or a 7. So in this case, it must be 110.13 or 110.17. We also never use a 5 because 5 is used often in option contracts. Stop should be moved to break even after 17 to 21 pips, depending on the real estate of the day. So in other words, it's not automatic. At 17 to 21 pips, you look and see if you might be able to move your stop. Anything spoken of in the room is an opinion, not a trade call. Everybody in the world is entitled to their opinion, including me, but my opinion is not a trade call. This is not a trade room. It's a training room. But we do make documented pips in here, and we are here to teach you to fish, not give you a fish. We're training how to use our methodology combined with the ProAct charting software to its full advantage as a service to our live room subscribers. So, I want to welcome our demo traders here. Anybody here on a one-day pass, we're glad you're here. Hopefully you see some things you like. I think you're going to find out pretty quickly that we are a big Forex family, and everybody here is helping everybody to get better. Okay. We are Forex target traders. That means many trading opportunities we identify are not entered during the New York session, but they may fulfill in subsequent sessions. That does not change the trading opportunity. So we will also do a heads up after the session that is recorded. We do that every day except Friday because there is no session after Friday in New York. If you're a demo trader, you must pay special attention during that recording. Live room subscribers have the ability to review that recording, but you do not. Live room subscribers also get chart alerts if we see anything later, but this just means go look at the charts, since these will not be trade setups, just things to watch for. They look like this, and they do have stops and limits, but these are sent out anywhere from 3 to 12 hours ahead of the market. So it's just a starting point for you in the wide open space and to see if the real estate still holds up and whether these numbers are still good. Now, any alerts either talked about verbally or sent to live room subscribers are for educational purposes only. This is not a trade signal calling system of business. Please use your real name. We don't like to use fake names or my big fat FX. It doesn't work for us. No swearing in the room. No sound. You just log out and log back in. It's an internet issue on your end, not on our end. There are no dumb questions in here. And all ProAct live sessions are recorded. So anytime we're live, it's being recorded. Now, it's not about trading every day. It's about trading that one right day. You make money by waiting, not by trading. Sounds so silly, nobody wants to believe it, but it's true. The one trade you're going to learn in here is the wait trade. We wait for our trade to come to us. So I'm going to look at the RF1010 trade setup now, so pay attention. This is a trade setup we look for every session. It's the first momentum move of the session. Could go 25 to 30 pips on initial thrust, and it could end up going 80 or 90 by the time it's all over. Alright, so we're looking to make a buy here, and it's found on the RF1010. It's called the RF1010 because it's found on the Royal Flush template. That's the RF part, and we use the two 10-minute charts. That means that the 60-minute gatekeeper here is not part of this setup. So we're looking for a buy on the euro. How do we get into that? First thing that has to happen is our gatekeeper has to set up. Alright, so what are we looking for? First thing is a blackjack. That's that black candle down there. Nothing magical about it. Hits the moving average. We turn it black so we can find it, but we ask that candle to tell us what direction is the money coming in. It puts a green diamond on the bottom, so it says the money's coming in a buy. We're interested because we're looking for a buy. Next thing we need is the moving average to be green because we're looking for a buy. Next thing we need is candles above that moving average because we're looking for a buy. And finally, we need the momentum indicator called the HMI. We need it to turn from red or black to green because we're looking for a buy. All right, as you can see, that didn't happen. So we have to wait a couple of candles. We wait a couple of candles. Everything gets in harmony here. Now we can go up to the trigger. What do we need up here? Up here we need a bright neon painted green arrow and painted candle. Alright, just be the opposite going down. Alright, so there it is. That tells us momentum is entering to the upside. But the RF1010 is a trade setup out of the desert. What is the desert? The desert is the highest moving average and the lowest moving average. If we're inside the desert, we do not have this trade setup. So we wait for the candle to pop out of the desert. It does so on that long candle there. That's called the trigger candle. And we will take the very next candle on one condition, that we have total harmony down in the gatekeeper still. Alright, a little bit more about the trigger candle. Before we enter, we let it center. What does that mean? Alright, before we enter any trades, we let it center on itself. So the trigger candle goes off and takes off and goes up 20 pips. What do? Nothing. We wait for it to come back on itself halfway or center on itself, which in this case would be 10 pips. We will then take the trade from there on one condition, that we have room to the targets. Now, it's very important. We never make an entry unless we know the exit. All right. Now, that's also important because we could get additional triggers. If we get an additional trigger, can we take this trade? The answer is yes. We got plenty of room to the next target. Then we get another one up here. Can we take this one? And the answer to that is no, we can't. We're too close to the target. So, you're a newbie though. You say, yeah, but man, you could get 5 or 8 pips up there. Why don't you go grab them? You'd be right. You could get 5 or 8 pips up there. And that's exactly what the average retail trader does. They trade for 5 to 8 pips, and so they then must be right 90% of the time for the rest of their life. It's not possible for you to be 90% correct for the rest of your life unless you are the greatest trader on the planet. Now, if you are the greatest trader on the planet, don't stop doing what you're doing, and you don't need to be in this room. But if you're not the greatest trader on the planet, you have got to stop trading for 5 to 8 pips and learn to trade to targets. So you decided to take that trade and get 5 to 8 pips, and guess what? The big boys can't make that trade, so they go away from the target so they can go at it again. You get stopped out, and what do you say? Ah, the daggone broker stopped me out again. No, the broker did not stop you out again. You took a trade you never should have taken because you took it right into a target that you didn't know was there. Alright, so now I'm going to show you an illustration of a sell, okay? Remember, the 60-minute is not part of this trade setup, so I'm looking for a sell. So now I need a blackjack the other way. There it is, to the downside. I need the moving average down. There it is, to the downside. I need candles below the moving average. There they are, down there. Alright, and I also need the momentum indicator telling I have enough gas in the tank to drive this to the target. Check, I got everything I need down here. I go up here looking for an arrow and a painted candle, and not only do I have an arrow and a painted candle, I also have a white dot. The white dot says we are potentially going 55 pips. Alright, so I have a potential trade set up here. The question is, do I have a trade? And the answer is, no, I don't. And the reason I don't is because I'm right above the 93.00 number. We never trade into a 00 number or a 0.50 number because option contracts are sitting on those numbers. If there's an option contract on it and it executes it, then the trade will go the opposite way. So we need to be able to move our stop to break even if we're going to trade into an even number or a 0.50. That's number one. Number two, we're still inside the desert here. So you see, folks, a trade setup is not a trade. And retail traders get this wrong all the time. Right? So, if you're new to our room, I'm going to quickly go through the 19 currencies, and then we're going to come back on those that show promise. Please hold your questions until then, and we will answer them. But today we also have a fundie. All right? So how do we trade a fundie? All right? We need to always be flat before a fundie. All right? That means that any currency that's going to be affected by this fundamental announcement, that's why it's called a fundie, you have to get flat on it because your stops are not guaranteed during a fundie. So what do? We turn it to a 1-minute chart. And on the 1-minute chart, we will have a reaction to the news. The news comes out, the market reacts to it. Okay? What do we want it to do? We want it to go sideways for 3 to 5 candles. Right? Why do we want to do that? Because we don't want to get caught in a whipsaw, number one. Number two, they're telling us if they don't do that and they go sideways, there are no sellers based on this announcement. Therefore, there can only be buyers in the market. So we go above that sideways move, find any resistance above it, and get above that. We place an entry order, never a market order, on one condition, that we have room to the target. All right? So our job prior to a fundie is to find room for the announcement and then room for the follow-through. And we have to have at least a 1-to-1 risk-to-reward ratio. So let's go in the charts now and let's see what happens. All right, there we go. All right, I need to get through these fundies here quickly. So our job is to find out which U.S. dollar-based currency we can trade. We need to find a wide open space. That's what we're looking for. First step is to see what they've been doing with the dollar index, because that's what's going to be rocketing. This is a U.S. dollar announcement. So the dollar index says that they've been purchasing dollars for the last couple of days. As you can see, we're in an uptrend there, okay? So over to the euro, and we can see the euro is going to the downside, which makes total sense. Now, let me pop this up a little bigger here, and you can see it. All right. So we've just broken support here, right there. Our next target is the day chart bottom down here, as you can see. And we've had 1, 2, we're in a third wave to the downside. So let's mark the HSI from the top, which will find the targets for us. And all right, we can see we got lots of room. So we got 60 some pips here on the euro down to 1.3429. Okay, so hold on just a minute. Sorry. Okay, thank you, Pip. No. Okay, so we're looking for 60 pips to the downside. In order for that to happen, we would have to have a dollar positive announcement. So if the dollar positive happened, then we would look for follow through to the downside on the euro. Now, I am not a fan of the euro at all, because all the dumb money is over here. Because all the dumb money is over here, that means all the black boxes are over here. But everybody wants to trade the euro. Why? Well, it's only 1 or 2 pips to get in, man. That's why I trade the euro. All right, so you're trading with all the dumb money. So if we can find anything besides the euro, we're going to do it and not trade the euro. All right? I don't want to trade with dumb money. I want to trade with smart money. All right, this is the British pound right here, and we'll come back and do session recaps after the Fundy, by the way. So we have session recaps we do Monday from Friday. So, all right. So you can see here in the British pound, we had a nice movement, which, by the way, we planned on last week, and got a nice little trade in there. We've taken support. We're right here at support. So we've broken the day chart trend, but we're right here at support. All right, and that creates a big problem for us, in that if we do pop down, we've only got about 20 pips to there, and we'll see a bounce. So what we hope will happen before the announcement is that they'll kind of pull this up into this area here before the announcement, and then we'll get this trade to the downside. So if dollar positive again, if it's dollar positive, we would look for that British pound to go up to the upside and then down. All right. Let's hope that happens, because I don't want to trade the euro. All right. All right, so that takes care of that. Over to the CAD. We don't trade the dollar CAD in an announcement because it's not called a loonie for nothing. But we also can't trade it anywhere at the top of a trend line here, and we need a retracement. So the CAD is off the shelf until we get some sort of retracement. Over to the Swissy. All right, Swissy's going up because they're buying dollars, okay, this morning. Okay, so again, if we have a dollar positive, all right, let me take this off here. Come on. There we go. All right, so dollar positive again would give us a move to the upside. I'm not liking this currency right now, and you can see why. It's in consolidation pretty good right here. And if we do bust up to the upside, we got a real potential of a head and shoulders here, all right, which gives us a lot of risk there for very little pips, all right. So we're looking for that trade to the downside there if we can possibly get it, all right. Now, if that would happen, then we would have a dollar negative announcement, all right, and that would mean that the dollar index would have to reverse, all right. So it's going to be very difficult to do that in a couple of minutes on the dollar Swissy, all right. But if we take this to the bigger chart, up to a day chart, we can see pretty clearly here that in the big picture, we have been running in a downtrend for quite a while here. And this is just a movement to the upside. Let me pop this up as a day chart trend. All my day chart analysis is pink because I like to get in touch with my feminine side, and that means I know that it came from the day chart. All right. Let me take this one off here for now. All right, so you can see in reality on the day chart we're stuck inside a wedge. All right. Now, when we get stuck inside a wedge, we don't do anything. All right. That's what we do. Nothing.
There's something happening here. What it is ain't exactly clear.
Something something happening here. What it is isn't exactly clear. Are they going to break it out, or are they going to break it down? That's what happens when you're in a wedge. You don't know what that's going to be, so we sit on the sidelines, all right? So we've got to sit on the sidelines on the dollar Swissy, all right? So we've got to wait until they determine that. If they break out, we can go. We know where the targets are. Dollar yen coming to the downside, and we're in a nice big trend to the downside. We're in a descending wedge at this time. We had a nice break of our our bear flag on Friday. That'll be a session recap, because we identified this trade down at the bottom, and of course it made it. Right now we're looking for this opportunity here. This is a two-part trade. All right, let me draw this again. I'll pop it over in the middle so you can see it. All right, this is a two-part trade. Make it a little bigger here. All right. Since we're in a descending wedge and we're in a downtrend, we're anticipating the move to the downside. So this is the first trade, and this is the second trade. Okay, it's what we call a snowman. All right, we love snowman. Why? Because we get to press our winners. All right, we press our winners without exception. As you're going to see, if you've been here all week, you're going to see traders getting tons and tons of pips, and the reason is they press their winners. We only trade in these wide open spaces. There are two of them here, and we would enter our first trade in here, and our second trade would be a double that position into this area right here. All right, and you're going to see that a lot if you hang for the week. All right, so that would be a dollar negative. We would be very interested in a UJ to the downside, right, for about 100 pips or more. Take a look at the Aussie. Okay, Aussie is attempting a breakout right now. I don't anticipate that this is going to be a very strong breakout. I think they're going to go up to the top. But I just said the worst word you can see in Forex, which is think. You don't think in the Forex. You react, which means you do all your work beforehand, and when the market reacts in the way you've planned, you react with it. There is no thing about, well, maybe it isn't going to go, maybe it is not, maybe it is. If you're at that point, you're not trading anyway. It's when you go, it's going to hit that and bounce to the downside. If it hits that and bounces downside, you take the trade. It's all about being decisive, and how you become decisive is you do the work ahead of time. All right, that's what you got to do. All right, big wide open space here and a huge one down here. All right, this is what we call el snowman gordo. Spanish, gordo means fat. This is one fat snowman down here, and we do not want to miss this whole area down in this area here. All right. So what do we need? A dollar positive would give us the Aussie to the downside. All right. Now that's supposedly we've got dollar positive right now in the dollar index, and it's been moving up. So we got a lot of concern about this one. We're going to trade this after the announcement, not in the announcement. All right. Because it's too wishy-washy at this point in time. All right. But it is a big opportunity once it materializes and shows us it. All right, the last one we can trade in the fundy is the New Zealand dollar. All right, New Zealand dollar has come to the bottom here. This is also the blog post this morning. You can go look at the blog. I blog. I'm an analyst for Forex Street. I'm an analyst for Traders Planet. I'm an analyst for Invest.com. So this was the post for this morning. We're looking to take out this day chart bottom here. All right, now the question is, will we do this with a move up and then a move down? The previous support is right here, so the move should come up to the support and sell to the downside. Well, if the fundy occurs and it's immediate movement, there's no place for us to go, so we can't trade the New Zealand. So we could come back after the New Zealand if it comes up in this area, and we'll look for the short back down to 80, 60 area right in there. All right, so nothing from the New Zealand until after the announcement. All right. All right, so by process of elimination, we got the dollar positive. We're looking for the euro dollar or the British pound. Let's go review them one more time. Euro dollar, all right. Euro dollar, we need that euro dollar to go to the, hold on just a minute. Let me look at that pound real quick. There we go, okay. Euro dollar, we're looking for it to go to the downside here, all right. And that would have to be dollar positive. A sell has the possibility we're at 34.89. We're looking for a target of 34.29. This is again a snowman, and we like snowman, so it makes me enticed to actually even trade the euro, which I rarely trade the euro, but because of this, I may just do it today. We'll see. There's a snowman, so that means I can trade one here and two here. All right. So they got 60 pips to here. Now, the ATR, average true range of the euro dollar, is 80 pips. All right, so it can go 3 T30s. These little lines you see here are 30 pips apart. All right, so you can go 3 of those. It's already gone 1. So that means the target is actually, in reality, at the 34.29. All right, So we got about 60 pips here. All right, let's go look at the British pound in comparison. All right. And the British pound is sitting here at the bottom, and we're up here at 46 going down to 10. So we only have 36 pips in the British pound, and the British pound needs about a 50 pip stop. And so we, by process of elimination, we have to trade the euro, not the British pound, but we'll come back to the euro, the pound afterwards if we get dollar positive. All right. All right. If we get dollar negative, then it's going to be the dollar yen cross to the downside, and it's this area right in here. I'm hoping that we get dollar negative because I would really like to trade this the UJ to the downside. All right. So there we go. That's what we're going to do. While we're over here, I'm going to take a look at the rest of the majors here. We're going to kind of run through them here. We only got about 5 minutes, so let's just see what we got left here, and then we'll do the announcement. And so this is the pound yen. Pound yen is moving down into this area pretty well. We're in this big wide open space. This is the only place we'll trade, folks, is places like this. Why did this trade work? Because it was a wide open space. Why did that trade work? Because it's a wide open space. Why did that trade work? Because it's a wide open space. Why did that trade work? Because it's a wide open space. All right. Where did it not work? Well, there isn't any of that stuff. So what happens to retail traders? They trade in that stuff and miss the wide open space. Well, we don't do that here. The only place that we will trade as a trader is in the wide open space. All right, so we can see we have a one wave down, two corrective wave. We're in a third wave right now. So this is going to end pretty soon, and they'll do a fourth wave. Will that end all the way down here, or will that end up at the top? See, all right, there's wave 1, wave 2, wave 3. What's next? Wave 4 and wave 5. The question is, will they take this fourth wave, third wave, all the way to here, and then take it up to here and then go, or will they take it somewhere in here? All right, that's the big question here. So let's see if we can find an interim target in here that might give it the bounce point. So we're going to go in here and take a look. And I'm going to put the HSI on here, and that tells me we're running right on the numbers here. All right, so that means I got to find a Fibonacci extension over here and a PSR. So I'm going to go in the past. We'll talk about PSRs later. And let me see if I can find a PSR in this area. I don't think there is. Otherwise, I would have already had them. But we'll just check it to be sure. Yeah, there are none. Okay, so we'll talk about them in a minute. All right, so let me go down to a 60-minute chart and get a roadmap here and see where we are. All right, so here's how you do it. You go to the 60-minute chart. You find a swing low, swing high, which is a swing low, swing high. Pop a set of fibs on here to find the extensions here to find out where we are in this move. All right, so you never make a trade unless you know where it's going. If we don't know where it's going, we walk away. So let's put it on here, and you can see we're at the 618 fib right now. And where could we go from here? That would be the 1270, which is that confluence down here. So yeah, we got a lot of confluence for right there. It looks like they could make that trade right there. So we would do that trade right there. The ATR of this currency is about 190 pips. As you can see, it went nowhere during the night. So we can easily reach out and do that trade. So we're going to look for that pound yen this morning. We get an opportunity on that. And see, after the announcement, the pound part will probably move on the announcement, which the pound part of this pound yen would also move. All right, so let's hope that we get dollar positive, because that would give us the best trade over here in the pound yen, because we got 1, 2, 3, we got 100 pips down here, and maybe another 40 down to the day chart bottom. All right, it's huge. Over to the EJ. All right, EJ, same thing. This is a big wide open space. This is where we identified it last week. All right, this was a trade for Friday, and there it is. All right, why did it work? Should be pretty easy for everybody to see. It's got nothing but a wide open space. All right, that gives us the target down here still to come of 136.83. We're at 137.22. We got 40 pips left in the EJ. Let me take it down a little lower here. And gee, she's trying to push this thing. Got to wait till after the announcement, but she's ready to go right away. You see that? She'll be ready to go. We got a white dot already printed, potentially going 55 pips. All right, we got everything here. We had that for a while. We're black now, which is neutral. So right after the announcement, this thing ought to go. Many of our traders will trade that, as opposed to trading that stupid euro. All right. So, all right. All right. Let's see what's going on here. All right. So, yeah, oh, Pips, I'm sorry, I was on the other side. No wonder I wasn't getting any of the chat. Thank you. So, yeah, the EJ, sorry, it was 126. I said 186. It's 126. All right. Alrighty, one more in here. No, that's it. How much time we got? We only got about 40 seconds, so we're done with the majors. We know what to do. We got 3 majors to trade. We're going to go over to the exotics after the announcement is done. Normally we get through this by now, but I'm going a little slower because we got newbies trying to catch up with what we're saying. So anyway, all right. So over to, we'll wait and see what happens here. Well, I only got 15 seconds. So Pip will go get the announcement for us and tell us whether it's dollar positive or dollar negative. There's nothing to do. There is no hurry in the Forex, folks. None. All right. We got to wait 3 to 5 minutes before we can even think about putting a trade on. And the currency's got to do specific things for us to even do that. All right, it's dollar negative. Okay, that means we go get the trade the dollar yen. All right, so we're ready to go on here. Look at them go. All right, so don't freak out here. They're going to go sideways. All right, so let's put it out of the 1 minute chart. And what happens here is, all right, first thing that happens is they do the straddlers. All right, they're going to get the straddlers in, so then they've already got the sellers in. All they got to do is come back up, and if they even get close to here, the increased spread and fractional pricing will take the buyers in. So they'll have them in both ways, and they know that, and because there's a lot of gamblers here. All right. Now, why do they know that? Because there's $8 billion worth of retail money in the Forex every day. 800 billion of us. All right. A huge percentage of that is in gambling on this straddle right here. So the market knows that, and it goes and tries to get that money. So if they get them in one side and then pop them the other, they know they're going to get 50% of the money no matter what. And maybe if they can whipsaw it, they'll get 100% of it. All right? So we're just waiting to see if it'll go sideways here. That's 1 minute right there. All right? We know where the target is. Target 1 is 101.18 and target 2 is 171. All right? So it's very simple. It's about risk and reward. If we have risk and reward to this target, we can take it. If we don't have risk and reward to that target, we can't take it. It's just that simple. All right. So it's it's quite a bit off, so we should see some follow through. Let's see if they pop it back up. If they don't pop it back up, we're right here at the 50. All right, so that at the same time that we had the announcement, we also had the option contracts expire on the dollar yen, and there were some big option contracts over there this morning. You pop them up here and see on the dollar, on the yen at 101.50. We didn't have one, huh? We had one at 102. We had one. Okay. So, all right. So they're still popping. Don't jump in. All right. Dumb money jumps in at the bottom. Smart money buys at the top, or smart money waits for the support to be broken, break hooks and goes, which means they're actually buying the top after the break. All right. And if this just keeps on going, folks, we cannot jump in it because of the risk and reward. All right. This is your first target. That's all you got left right now, and your risk has got to be 5 to 7 pips above here. So you can just quickly see that that's your risk, that's your reward. You can't make this trade from here. All right? The risk is almost double the reward. It's not a trade unless this thing comes up in here. It's not. Now, we can trade below here, but the problem is now, if they push this thing down that low, the ATR is what, 90 pips, something like that, 92 pips. All right. So they've just moved 30 pips. They just moved 40 pips. They've moved half of that, of its ATR for the day. All right. So we need them to pull back up. Let's hope they pull back up to 101.50 right there, and then we can take the trade from here, as you can see. Then we'll be able to make that trade. We'll have a 1-to-1, and we double our position down here. Everybody see that? So it's easy. If you do the work, the trade becomes evident. You don't have to guess where the trade is. All you got to do is make sure you got risk and reward. All right? And then major on maximizing that opportunity for your margin account, which is pressing your winners without exception. And the key word there is without exception. So there we go. We're coming back up. And they do need to square up these candles. So we're waiting to see if they'll square them up. You can see we
we're going to have trouble here. If they go up to the 101.50, we can take the trade. Normally, here's what we want to do. We want to place an entry order below here for the target. Well, you can see what the problem is. As long as it goes to here, there's no problem. But we can't guarantee this. The only thing we can prove is this target right here, and we're too close. It's got to come up. If it comes up to 101.50, however, and makes a turn, we can trade it off of there to 101.18 and then double our position here. All right? So there's your possibilities. A or B down here, other than that. And B is a little iffy at this point because of the ATR. It's eaten up half of its ATR in this announcement. It doesn't mean anything. I mean, it means a lot, but it doesn't mean anything. I mean, the reason that it's an average is because on fundies, it could go quite a bit further than its ATR. But we still got to take it into consideration. So the higher the ATR, the greater the volatility. The lower the ATR, the lower the volatility. All right. All right, so now we see the sideways move there. All right. So normally we'd be putting a trade in at 101.30, but the problem is the first target is 101.18. There's only 12 pips there. I can't do that. And most likely all the big boys will recognize that and will say nobody's going to make a trade here because that's selling at the bottom. They're going to have to pull it up. So the higher they get, once they get up to 101.50, we're going to be very interested in this trade. Just out of curiosity, let's see what the euro did. Nothing, junk, as always. See? We don't want this, we're going to sell over there. British pound, what's it doing? Coming up too. Yeah. All right. They'll use this as a catalyst to drive it up to get in position and sell it down. All right. So over back to that UJ. Nice sideways move here. I need to get it up a little higher though. But that's what we're looking for, always. Down on a 1 minute chart, we're looking for this sideways move. Now, if this target was down here, for instance, and this was what we had for the opportunity, we would place an entry order right here. That's how you trade it. You trade it there because that way the currency has to prove it's going to move through there. I can't trade it because there's only 18 pips there, folks. And some of you go, well, yeah, but 18 pips, I only make 5 to 8 on average. You're right. That's why you're called the dumb money. The dumb money trades for 5 to 8 pips. The smart money trades for 50, 80, 100. All right? You can't be successful trading for that. And I'll prove it to you. As we go along, I'll prove it to you. All right, so we can't make this trade if it goes. We can make the second one, which is underneath there. All right? And I hate that when it happens, but you know, it's the way it is. It's the real estate we're given today. We got to pay attention to the real estate today, and sometimes the opportunity is here, and sometimes it's not here. Even though we could sit here and watch the trade go right to our target. We could watch it do that and say, well, yeah, you should have done that. No, I have to break a rule to do it. And if I break a rule, I become a rule breaker. If I become a rule breaker, I will lose my money. Rule breakers get punished in the Forex. Pure and simple. The market will reward bad trading occasionally. It will not record bad trading consistently. All right? So if you're not rules-based, I can guarantee you're going to struggle. So still waiting to see. I would love to see it come up around 50. If it'll come up to 101.50 and turn, I will take the trade there. Okay. Now, in order to do that, you're going to have to do that with only 1/3 of your lots. All right. Because you're in the riskiest time there is to trade. What is that? A fundamental announcement where technicals are put on the shelf temporarily. All right. So if it pops up here, you trade it with 1/3 of your lots. Okay. And you hold all the way here. And when you break here, you're going to break, hook, and go. When you break, hook, and go, 2/3 of your lots goes on here for that target, if it'll pull up. All right? Now, currently, it's not pulling up. It's just hanging down there. All right? And I can't make it. Sorry, folks. I wish I could. I'd love to do it, but we don't do that kind of stuff. That's gambling. Gamblers get whacked. If you want to gamble, go to Las Vegas, or go to Monte Carlo, or go to Blackpool. Don't gamble in the Forex. Let's go look at the euro. Yep. See, this is not a good situation for us because we're not looking for the buy. Right? It's reacting to the announcement. Okay, no doubt about it. It's reacting to the announcement. So they'll use this as a catalyst to take it up. Now, they may decide, okay, that's it, that's good forever, ever, and they might take it all the way up to here, but we can't prove that until we start, until we get some more information up here for the trade to the upside. All right, so trade to the upside we cannot take. We can take the trade to the downside instantaneously, all right, if they'll turn it. Because we're in a downtrend. We've already broken out of here. We've already taken the support out. This is a break, hook, and go right now. Okay. Well, they send the forecast out ahead of time. The forecast says whatever that number is. Okay. That's what they expect the number to come in. When the number comes out plus or minus that number, this is theoretically whatever that forecast is already programmed into. It's already in the candlesticks. It's already in the price of the currency. Therefore, if the forecast comes out and this is drastically different either way, that means the price of this currency is not correct. And therefore, they will quickly price that in the direction it is. Dollar negative, the dollar negative part of it will go down. So if that's what it is, then that means the euro, which is the other part, will go to the upside. Right? Yeah. And then again, what they want to do is they want to use the fundy as a catalyst to drive what they're already doing. If the fundy comes out and it doesn't match what they're already doing, they got a decision to make. Do we live with the fundy or do we keep doing what we're doing? All right? And when that happens, then that becomes a problem for everybody because it takes time for that to shake itself out of the market. So over to the dollar yen again. And we're just not getting any push to the upside, folks. So we can't trade it here unless it goes up. So somebody keep an eye on that. I'll tell you what, let me just solve that. I'm going to put a line here, and I'm going to put alert on it. And if it pops up there, it'll alert me, and I can go back and see if we can get the rest of those currencies. Want above or equal. All right, so now if it goes up there and hits that, it'll notify me. So let's go over to the exotics. So we need to be ready for these because typically the exotics will give us a better opportunity, okay? So here's the Aussie yen. All right, we're in a downtrend. We're in another bear flag, as you can see. There's a bear flag. Okay, so the break of the bear flag tells us that's our trade, all right? These targets that are dotted right here have already been taken out, all right? See, you can see where they took them out. They took them out. So they are no longer targets. They are barriers. Our next target is down here at 88.15. 88.15 right there, all right? We're currently at 89.38, so we got 115 AJ trade if it'll break through that bear flag. So let's draw the bear flag and be prepared. A break and hook and go out of the bear flag gives us the opportunity to make one trade here. Break, hook, and go, you put one position on here. Once you take this bottom out and the 89, you put your second position on here for that target. Once you break the 88.50, you put your third position on here. 2 and 1. There they are. 3 wide open spaces, all right? That's where you trade. If you don't have a wide open space, you don't trade.
Wide open spaces. Wide open spaces.
Yeah, it's got an ATR of 139 pips, so nice, okay? We'll look for that. The AJ for sure to the downside. All right. EG has come up. Everybody says, why do you trade the EG? Well, because it pays 65% or something like that, 63% more than the euro. We don't need a lot of movement to get 63% more profit. All right. Now, unfortunately, we've got to get a sell on it. All right, because we're in a downtrend. And you go, well, why don't you trade them counter trend? Only 20% of the money is made counter trend. 80% of the money is made with the trend. Now, you can trade counter trend if you have doubled or tripled your account once or twice this year. Then you have the skill level to trade counter trend. If you can't even double, right, so be smart. Don't trade counter trend until you've got the skill level. All right. So we're looking for a sell to the downside. Nice opportunity if we get it because there's the head and there's the body of a snowman. Okay. You can see him again, which means we have enough space for risk and reward and to be able to double our position to the downside. So there we go. All right. So EG to the downside, yes. All right. All right, Euro Aussie. Now normally we're not taking as much time. We're through these by now. We're in a falling wedge inside the after a breakout and a downtrend. There's the breakout. There's a break of support. We're firmly in a downtrend. There's a little bit of movement here, but we're in a falling wedge. We would love to see this come over here and then break to the downside. That would be a great opportunity there. Okay, let me bring this down and pop it over here. And we're ready. We will take that trade if it comes over here. That's why these little arrows are here to tell us that that's what we're doing. We've already figured it out. So if it comes over here and turns, we don't have to do any more figuring out. We've already determined we will trade that. All right. CAD yen. Everything is basically in a downtrend. It's pretty screwy right now. I'll tell you what. So I can see in the CAD yen, it's going sideways. And the reason for that is the dollar CAD is going sideways. I mean, the dollar CAD needs to retrace. All right. So this is moving down here, and you can see there's a potential head and shoulders here, so we got to take the head and shoulders out. We got to wait till we're down below here, this line right here. Below this line here, we can be a seller, not until, because of the danger of the head and shoulders. Let's bring this down below the line. There it is. We will trade it down here. All right, back inside the channel that it had built last week. We made a lot of cash on this last week, right there, running that channel. All right, Pound Chief had a breakout to the downside. Oops, sorry. Hold on, let me pop that back up. All right, so, you know, we're down now to the downside. I'm going to have to redo this, and I'm going to remove this and start all over again. So once I do that, I don't know where it's going. I take everything off. That way I can't trade it. I don't trade anything that I don't know where the ending is. We never make an entry unless we know the exit. All right, so it's over to the Pound Aussie, up to the 240 chart, and what are we in up here? And by the way, you notice that the first thing I do is go to the 240 chart. All right, there is no analysis below the 240 chart. Just get rid of it. All right, you're down there with all the noise. The big boys trade the 240 and enter on the 60. So the most important trade charts for us are the 240 and the 60. We will trade the 240 with the 60. Validating it, and we will only look for an entry on a 10-minute chart. That's all we use the 10-minute chart for. So we're not trading the 10-minute chart. We're trading the 240 chart. All right, so where are we at? Well, we can see our next trade is down to the 1270, 100% move off this Fibonacci move right here, swing high, swing low. We're currently at 85.61. The target is 85.17. So we got roughly about 40 pips here, just about 40 pips in there. Not a lot for the Pound Aussie. All right. Let me take this down a little lower here and look at it. And we got this is what we call a pole. So that means we're going to do it. This is the pole, and they're going to try to make this move. Okay. Let's see what the risk is. All right. The risk is we got to be above this this support right here, resistance, I should say, above this resistance for there. So there's the risk. There's the reward. Roughly 1-to-1 right now for 40 pips. All right. And we got a big target down below here, but Pound Aussie has a 220 pip ATR. What has it done all night? Nothing. So it's in position to make that move all the way to the downside. So yes, we're interested in it. Okay. So let's take it down to the 10 and see what she looks like. Ooh, she's trying to break. She's pulling back up. This would be a break, a hook, and a go. Before you enter, let it center. It's broken, hooked. We're looking to see if it turns. We're going to make the trade. All right, if it goes below here. I'm not saying you make the trade. You decide whether that trade's worthwhile to you. The parameters of the trade are correct. All right, a break, hook, and go, taking out support. All right, and stop is going to be here. So there's your risk, and there's your potential reward for number 1. And then number 2 below here. Once again, snowman, good risk for reward. 2 wide open spaces, I'm in. All right. So GA to the downside, and it's close. So we're leaving on the 10-minute chart. All right, okay, I'm hurrying now because I'm trying to get through these before they all move, so we have an opportunity. Euro New Zealand, we're looking for this big opportunity above 6,700. We're at 66.55. It's got to go 45 pips before it happens. Nothing for us to do on the Euro New Zealand. All right. Pound New Zealand. All right. Pound New Zealand has corrected as we anticipated. We're now in position. Comes out. I don't know if it's here or they'll come all the way down to here before they bottom out and go. We're going to be a buyer. All right. So let's flip this around. All right. It's got an ATR of 223. It is the Ferrari. It can rock and roll. All right. 223, we'll trade that if we get the opportunity, and because it has that kind of a ATR, there's no stinking clicking out for 5 to 10 pips. All right? What happens? The average retail trader will get 5 to 10 pips, and the average professional trader will take 200 out of that. And they'll wonder why, their average retail guy wonders why he's not making any money, because he's not trading. He's just gambling. All right. All right. Nothing to do on the New Zealand yen. We're at the bottom of a trend wall. We've broken out this day chart trend. I'll take that off now. That's gone, and we're too close to the bottom here. It just hit our target. It just hit it right now, and that's it. Now the question is this a bigger trend? Let's pop it out here, and man, I kind of like it. Hold on just a minute. Yeah, I like it here. Okay, so we do have an opportunity here. Okay, the trend is subjective, and that's the big problem. By the way, fast trackers and live room for subscribers, we're going to do a review tonight on trends. All right, just a heads up. All right, so if you're weak on trends, tonight's the night to be there. All right, so what do we got left? Okay, 81.95. We're at 82.20, 82.18. I can't make the trade here. If they pull us back up, if they'll pull it back up a little ways, do a break hook and go up here, then we can trade that and then that. If they don't do that, there's only this. We can't trade it. We got to walk away. So we'll wait for the bounce, see if we get a pullback on the NJ. And if they do that, we're going to be interested in the sell. Okay. And finally, Aussie Chief, taking forever to get over here. All right. Aussie Chief, we're waiting to see if we get the turn here on the Aussie Chief to the downside. As you can see, we've got a 1, 2, 3, 4. We're looking for the 5th wave down in this area right here. This is a big opportunity, folks. It'll be an all-week trade if we get it. All week. There is the first part. There's the first part of the trade. There's the second part of the trade. And there's the third part of the trade. All right, right there. 1, 2, and 3. All right. Oh, I skipped it. I'll go back to it. Thanks, Pip. All right, so that's a big opportunity here if we get to sell. And you can see we got a set of twins building right now. And we will be interested on the follow through of that set of twins up there. So let me take this down to a 60. There they are. All right, let's go back. Let's go take a look here. All right. What has it got to break for us to trade this to the downside? We'll put a single line trend line on this one right here. Right there. Single line trend line there. And there's going to be a secondary barrier right here. All right, so what do we got? We got this opportunity right here first. This is a big opportunity here. We do not want to miss that opportunity right there. Trade 1 is right there. If we can take this out, we're going to be below 79.30. All right, 79.30, got 50 pips sitting there. All right. XAG, for those in Mexico, wherever we happen to be, outside the United States, all right, up to a 240, and you can see here that we're running a little channel here. Let me draw the channel to the downside, and we'll see what she looks like here. And all right, so there's a channel to the downside. We're in it. We're going back to the top. We got up to the top here and make a turn. We're going to trade it down. The overall target right now is down here at 1892, all right, to the downside. If we break here, then we're looking to come up here. All right, so we're good at either one of them, but right now we're in no man's land, which is in between these two. Nothing to do here. It's only got an ATR of 43. We make tons of pips on silver. We don't even count them. All right. We don't count them because we make too many pips already, and adding a silver, which half of us can't trade anyway, we don't bother with it. We do market for our traders. All right, back over the dollar yen. You can open the chat, Pip. Yeah, open the chat up. All right, as you can see here, we've gone nowhere. All right, so there's the new, and we can't make this trade. We can make the trade below here. We can't make the trade here. All right, so all right. So one of the things I want to do real quick is get our session recaps. We're not normally open on Friday, but this next Friday, because of non-farm payroll and because we have all of you here, we will be happy that we're going to open the room on Friday. Normally we do not trade on Friday, but it is non-farm payroll. We'll need to do something after that, okay? So, okay, pound yen, Steve. I'm looking for, there it goes, dollar yen. We don't trade gold, Felipe. We don't trade it, so. Lit up like a Christmas tree. No, it doesn't. Has nothing. We do mark the pivot point. It is the grid base. All right, let me take this up a little higher here. All right, this is the pivot point every day. Right there, it says grid base. That's the pivot point. Comes off the day chart, changes every day at 5 o'clock. All right, so that's for pivot point. We don't trade pivot points per se. All right. I know, too many lines, dude. It means when you have it auto-scaled, you have to use the auto-scale. Good question, by the way. When you have it auto-scaled, then you have everything correctly on the charts, all right? And that's it. It's got to be less than 45 degrees, all right? So if you want to know what 45 degrees is, the tool up here, your channel key tool, is a 45 degree to the upside. But I'll help you out here. This is how you look. If you want to know what a trend is, there it is. All right. A sustainable trend to the downside is 10 to 4 on your watch. A sustainable trend to the upside is 8 to 2 on your watch. The problem is that is sustainable, but the moves inside it are not. They are thrust up, thrust up, thrust up, thrust up, or down. All right? And it's these thrusts that give us the opportunity, but they are. That's why you got to know where the targets are, and that's why you got to be judicious about moving your stops and protecting your profit. Okay, that's it. So pop this back up. Somebody help Richard. If we get a trade, Mohammed, we will. We do not manufacture trades. If we can find a trade, we're going to take a trade. Absolutely. We make a lot of trades. All right? But we don't. I'm in a room, I should trade. Not necessarily. We only make, on average, 12 to 15 trades a week. All 3 sessions. 12 to 15 sessions. 12 to 15 a week is it. The difference is our average trade is 57 pips. That's our average trade. See? So, Vaughn, I will when we get an opportunity here, but it's break it. Here's one right here. Can you see that one, Vaughn? Right there? Down, up, centers the candle, and then goes. You see it right there? That's a perfect one right there. All right. We also call that a break, hook, and go. When it breaks support, it always hooks back. Not always, but over 90% of the time, it will hook back. All right. All right. 90+% of the time, it's going to come back. What do traders do? They sell at the bottom of that, get stopped out when it comes back, and watch the currency go right where it's going. And they wonder what happened. Your rules. The rules are we wait for a center. We wait for a break, hook, and go. We do it because it's over 90% of the time. And the few times it doesn't is a missed opportunity, and I'd rather not worry about those. All right. So all of them, whatever's moving, Mike. All right. But all right, let's see if I can catch up here. All right. I do want to get the session recaps for our record. Okay. So fast track traders and everybody else who was here on Friday. How many got the pound Aussie, and what was your trade, your session recap? Whatever the target is. Rick got 72. Anybody else? David, 89. Nice job. Anybody else? Sandy, 54. Nice. Barbara, 178 and 15 and still in. Nice job, Barbara. Okay, way to go. Larry, all right, 35, 35, 20, 282. Nice job. Okay, Charles, 61, 60, minus 45, minus 24. Charles, what happened on those, man? Amanda, 80 and 65. Nice job. 67 plus 19. Nice job. 111. Carlos. Okay, pound Aussie. Okay, there we go. Blue, 124. Okay, so I don't know. You want to call 64 pips? 64 pips. I mean, lots of people over 100 pips, and that makes it very. Our record is very, 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 very conservative. All right? We'll do all that, Mixter. Let me get these out of the way. Okay, Wendy, 88 and 66. Ron, 148, 78 and 54. Nice job, Ron. Okay. All right. So, CJ, all right. Watch this currency here on this British pound here, because we have broken a hook. We're waiting for a momentum to the downside here. Okay. All right. We still don't have our gatekeeper here. Not ready to go yet. All right. So we'll keep an eye on this one. Can't trade the dollar yen, unfortunately. So, all right. CJ, how many got CJ? I will do that as soon as I get through with this, everybody, please. We have a procedure here. You're guests in our room, all right? So that's it. No, because we do all of our traders. FXG, we can't do that. By the way, please use your real name in the future because I can't deal with FXG, okay? All right. So, CAD yen. All right, so this was a trade from last week, this little move down here, all right, 37.26, nice layout. Anybody else? All right, okay, all right, Virgil. No, we don't, Terry. Yes, we do. We will show it to you. We have, it's over 40,000 pips last year. And one of our traders who happens to be in here today has 26,000 by himself. Amanda, 40 and 20, nice job. Charles, 31 and 9. Okay, and what do you got? Anybody else? 38 and 24. Michael, nice job. Okay, anybody else? 50 and 45. Okay, let's call Michael's 38. All right. Okay, thanks, Rick. 50 and 45. Nice work. Aussie yen was a nice trade last week. Okay. Aussie yen was this one right here. Anybody? There's my friend from Romania, Grigore. Charles, 1 pip? Ah, come on. Well, Andrew, 172, 153, 130, 111, 93, and 77. There's a good example, folks, of somebody who presses their winners. That's Andrew pressing his winners on this whole move, okay? Cherie, 123, 54, and 32. Nice job. Peter, 55. Nice job. 101 blue. Amanda, 95, 75, and 45. Amanda is a brand new trader with us, by the way. All right, 30 and 21. Thank you, Layette. Got in late. All right. Looks like we could count Peter's 55. Everybody agree with that? Peter's 55. It's your record, not mine. All right, good. All right, couple ago, Aussie dollar. How many traded the Aussie dollar? All right. I don't know. Amanda got 1,300 last week, Pedro. We don't keep track of that stuff, but Amanda got 1,283. It was one day last week. We will go through all that. Everybody, calm down. We're trying to get through this process. There we go. 80 and 43. Okay. 89, 66, and 23. Cherie, nice job. Okay. Continue on. Anybody else? 75 and 50. Nice job, Larry. Okay. Anybody else? 76, 60. I'm not 606, I'm sure. 70, 60, and 33. Andrew, 87, 65, 41, 26. Nice job, everybody. Notice, I want new traders to see. What you're seeing is what happens when you press your winners in wide open spaces. You make multiple trades, which means you make multiple pips. All right? So 70, 64, 51, 42, and 21. 90, 80, 35. Yeah, I figured that out. That's Wendy. Okay. It is if you trade a standard contract, Steve, $10. Okay. So, all right. So, what do you think? Let's call Ron 64. That's certainly in there. All right. And EJ. All right. Look at that EJ go. Doggone it. We were looking at this. How come we missed this thing? This is what happens when you flip off and do other stuff. All right, so everybody can see this was there is the setup, trade setup. There it is right there. Bam. All right, we're in trade 1. We missed trade 1. We're now in trade 2 down here. All right. All right. AJ moving. Let's go catch that. All right, there we go. Okay. Way down here in the 10-minute chart. All right, got a white dot printed. Looking for 55 pips. All right, 55 pips is there from the white dot. We've had a hook. We have not taken the support out, folks. We got to take this support out. Don't trade it. Close is 8,900. We really got to be below 8,900 to take the trade. Okay. So right now the stop would have to be up here. 89.87 from 21. That's a 66 pip stop. The target from 8900 is down to 89.15. So we got a 85 pip target. 85 pips, 66 for 85. We can do it. So that's like telling Mozart, Dave, that you have too many notes on your chart. All right, Dave, let me explain something. You can't find wide open spaces unless you find the areas you don't trade. All right? And that's what on the retail traders, they haven't got a clue where they shouldn't trade, and whether they do trade right into one of these lines that I got. Yes, it's messy. It's the space in between that's not messy is what I want. I don't want the space that's got lines on it. I want these spaces where there's nothing on it. All right? And the only way to do that is to go find them all. All right? And then you're going to trade with the big boys, because the big boys know every stinking line on here. All right? They know every single one of them. All right? And they only trade when they got risk for reward, which is a minimum of 1 to 3. All right? So there. There you go, Amanda. All right. So can't take this until we get below 8,900. Still waiting for that UJ, not coming up. There it went. There's nothing we can do about this. Got it. See, I hate that. So see, we had it nailed. We had it nailed, but we couldn't make the trade because we had to break a red thing. That was trade number 1, trade number 2. Everybody see that? I can't even do it. We can't take the trade. All right? Couldn't take the trade because where it was. All right. Yes, you will be able to get the recording over. I will, Carmen. Everybody, listen, you're asking questions. We will answer, but we're trying to find a trade in the beginning of the systems. Do you want to trade, find a trade, or would you like to talk about stuff? Anybody interested in finding a trade? No, I'd rather chat. All right, so let's calm down with the questions about how to do this stuff, and we'll get to it. We're in the beginning of the session with opportunities. Let's watch for the opportunities. We've already identified them. All right, if the EJ's going, the GJ may be going. Let's see if we get that. This is a big trade. Got it. You see what happens if we're not ready? What happens if you're not ready? You missed the opportunity. There it is. Where did it go? Right to target. Where did it go? To the pip, to our target, right there. All right. That's because we're target traders. We know where they're trying to go. There it is. Bam, right there. All right. We're looking for one. That's what we're looking. We've already missed 3, Kevin. That's what's happened. We've missed 3 of them so far. All right. All right. We missed the EJ, missed the GJ. And the UJ we couldn't trade because it was too close. We had to break a rule to do it, but you can see that down she goes, and there she was, and there was nothing we could do about that thing. Got it. But this now this target's gone, so we make it dashed. All right, so we know it's still a barrier. Oh, they still haven't hit this one yet. Back up here around 50, and we could take it. Never did that. All right, yes you can, Carol. So nothing I can do about that one. All right. Over to the pound. Man, they're all giving us this. We can't trade the pound. It's too far down unless it gives us a pullback. Euro is a piece of junk, and it's still a piece of junk, and it's still sitting there, as you can see, as a piece of junk. Junk. All right. And why is it junk? I'll show you why it's junk. Here's what happened. This is the typical trader trading the euro. 3.8 pips, 2.7 pips, 6.7 pips, 5.4 pips, 2.8 pips. And because of that, they're going to be losers. And because there's millions of them over there, the euro is junky. All right? So it's just whipsawing. Whipsaw. Welcome to that world. We're going to take it below 89 if we get it. Let's go find that euro. All right, this one is in a wedge, and it's not ready to go yet. Euro Aussie, nothing yet. The GA is where we're at. Come on, baby. Now we know where the target is. See, it's all about knowing. This is the area you'll trade, Dave. Why? Because you have this line on, and you have these 2 lines down here, right? Which means there's nothing in here. This is your area. If you don't have that line, and you don't have that line, you don't know this exists. You see that? That's what happens. And then you trade in an area you never should trade in. Now, are you traded where there's no risk and reward? Right now, we're pushing the limit on risk and reward. All right, we're below this 85.50. All right, 85.50 down to 85.17. That's only 35 pips. That's all. That's a junky trade. What's the risk? 85.50. We got to be up here at 85.90. All right, can't trade it because there's no risk for reward. We can trade it if it comes back up. I can't trade it if it doesn't come back up. All right. So up there is where we got to get, and right now we're down too low. All right, but we'll keep an eye on it. Maybe we'll pop back up there. All right. Pound New Zealand is another one over the pound New Zealand, and not getting a bounce, so we're not interested. New Zealand yen, we're looking for for it to move up and go down. It's not moved up; it's just going down. Again, we've eaten up. This is what happens if you eat up too much real estate. You have no reward left. See that? That's no reward left. There's your risk. There's your risk, and there's your reward. Can you make that trade? Can you make that trade? It's jumped because all the dumb money trades it near, and because the dumb money is there, so are the black boxes. All right? It's the #1 currency traded in the world, and it only has an ATR of 80 pips. 80 pips for a currency is the #1 currency in the world. That means it goes less than 30 pips per session. That's right. That's its average, less than 30 pips per session. Right? We don't even look at 30 pip trades. Right? Why didn't we enter at 82.96? Because we were right in the middle. We weren't watching this currency #1, Jacob. #2, we were in a fundamental announcement. You have to stay flat in a fundamental announcement. See? New Zealand dollar. See? What has a dollar yen? Aussie dollar. Yeah. CAD yen has. New Zealand yen. Aussie chief. Yeah. You just wait on the sidelines. It's all a gamble. So you want to make sure you get a good trade. If you're going to trade it, I hate them. Black boxes are computer algorithms that are designed to trade nanoseconds and take stops. They can make 200 trades in a nanosecond. See? All right, that's all. We're waiting to see if we got them. Then we'll take the rest of the time. Once it slows down here, we'll start. This is a training room, so that's our whole purpose here, is to help you guys learn to do this. So let's wait. AJ is nothing yet. We're waiting to see if we get any of these movements. We've identified the trades that we will take, and right now these two, AJ and EJ, nothing yet. Pound Aussie, we're waiting for this, and we're not. It's eating too much real estate up, trying to get to where it needs to go. It does not have momentum in it. Okay, folks, you need to understand that. What is momentum? Big boys. There are no big boys pushing this thing. All right, that's the problem. Big boys aren't pushing it, not yet. And so what does that mean? That means that it's a very high likelihood we'll go sideways. And we won't go. See? Now, if it goes sideways, we'll trade them off the top. Professional money sells at the top. Dumb money sells at the bottom. If we take the trade here, we will be the dumb money because we will be selling at the bottom. So, anyway, all right. So, we can't do that. We've got to wait till it comes up, or there is no trade. Or we get a break, hook, and go down in this area, in which case we're all over that trade. Right? So nothing yet until we get up to here, or we get down to here. We're in no man's land in here. All right. All right. Here, NJ, no trade for now. Don't be looking for a trade. That's what I'm the new retail traders go in the market looking for a trade. Never. Listen to what I got to tell you. Never, ever, ever go in the market looking for a trade. Go in the market looking for the structure of the market, and the trade will become evident. All right, let me say that again. This is one of the most important things you ever hear. Never, ever, ever go in the market looking for a trade. Go in the market looking for the structure. When you understand the structure, you will know where your trade is. All right. So let's see. Nothing here on the NJ because we're too close to the target. Okay. All right. And Aussie Chief. All right. We're trying to get these done so that if we have movement. We're ready to go. It's not ready to go. Over on the majors, we're looking for the Aussie, and it's not doing what we need it to do. It's popping out here, so we're going to wait on this one. All right, so that's a trend breakout. Is that a full? Do we know that's a breakout for sure? No, we don't know it's a breakout. It could be a false breakout. So because we know it could be a false breakout, what do? We wait for our trade to come to us. This is the #1 trade you need, folks. The wait trade. The wait trade. All right. Almost all of you are over trading. All right. Yeah. So dollar yen, we're looking for the sell. Okay. Now maybe we'll get this. Okay. Okay. Again, you got to look for risk and reward. The decision to make a trade is made on risk and reward. All right. So what do we got? We're at 40. We're going to 18. That's 22 pips. What's my risk? Right now, your risk is above here. There's my risk. There's my reward. Can I make this trade? What's the answer? Can I make that trade? How do you determine it? Where you got to put your stop versus your entry. That's your risk. Where you got to enter your stop to the thing is your reward. All right, so risk is here, reward is here. Can we make this trade? We cannot make this trade. Do we know where it's going? Yep, it's going down to 101.18. I can't make the trade. All right, and listen, if you're not this, all right, we will. It'll get smaller, Rob. All right, dollar yen, and the other one is the British pound. Let's see what the British pound is in position. It's dicey at best. All right, let's see. Again, it's all about risk and reward. All right, so here we go. We know where our target is. It's 63.10. We're at 63.37. So we have 26 pips here. Our stop has got to be 5 to 7 pips above that. All right, so I'm just going to draw it. You can tell you can't make the trade. There's your risk. There's your reward. Can I make the trade? No, I can't make the trade. I know where it's going, but I can't make the trade. All right. Everybody see why we would like this trade? It's a wide open space. Why are the big boys making this trade right here? There's the whole trade. Why are they making that trade? Pretty simple. It's a wide open space for them. Yeah, I'll look at it. All right, dollar CAD.
If you're a rinse user,
Dollar CAD,
you've heard there's a new rinse
structure.
that talks about
Let's talk about
even after
structure.
eating and
We
drinking.
got a 1,
Rest Pro Health has
2,
always done that,
3,
and addresses
what's
all
next?
these other
4,
areas as well.
and then a 5. All
Rinsing
right.
with Pro Health after brushing can take your
All right. What do we
oral
need?
to a new
A
level.
4-wave
Now,
counter
that's
trade to the
what you
downside.
need.
That's the structure. All right. The only people who can trade this trade to the downside are advanced traders. No newbie should do it. How do you know when you can trade it? Have you doubled or tripled your account last year? Did you double or triple your account last year? If you did, you have the skill to do it. If you didn't, you don't have the skill. Walk away. See, that's the whole key. Learn what you can do at your level that you're at. All right. New traders try to take on the world, and they're over their heads in no time at all. So all right. So there's nothing to do on the Swiss on a CAD until we get down here, probably into this area right in here before we'll ever see a bounce. We have a square up that needs to be done here. That hasn't been done yet. That's at the 786 fib. So we could come all the way here before we get the bounce. All right. Structure says we're looking for a 4-wave to the downside, which means only advanced traders can trade the 4-wave to the downside. All right. So we're waiting to see what's happened. All right. Now, let's go over to, I got a currency that I got to read. People are saying, how do you do these lines? How do you get those done? No. Yes, we do, Les. If you're an advanced trader, all right? Yes, we do use them. Well, that is the only reason we use them, all right? All right, so pay attention. This is how we do it. We start up on a day chart, all right? Up here in the day chart, our job is to figure out where's the top and where's the bottom from where I currently sit. Well, it's pretty easy to see that top right there, all right? Now, is this the bottom? That's going to be the question, all right? So I'm going to turn this to pink because it's a day chart. I need to know where it came from. My pink lines are all from the day chart, all right? And I'm going to scrunch this down, and I'm looking to see where this bottom might be, all right? And I can see that if I drag this down, just looking left and right until it finally tells me where I'm at, all right? And it says there's a bottom right here. Tops, 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 bottoms, bottom, bottoms, 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 tops, 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 tops. There's a bottom there. I'm right at that. So this becomes a bounce point to the upside, or if it breaks, we're going to the next bottom. I got to know where that is. So I'm gonna clone this one and find out where the next bottom is in case I break and don't bounce. So I'm just looking right to left until I see what makes the most sense here. This makes the most sense. All right. Again, it's about finding that plus that plus that plus that plus those plus those plus this plus this. The preponderance evidence says that's the bottom if I break here. The preponderance evidence here says that's the bottom if it bounces.
So I've totally gone
very
pro
simple.
with
Not hard.
Pro Health.
Right, there it is.
With
All right.
Quest Pro Health.
Now, we can also see that in the big picture, we are in a big uptrend. This, right there, and we can see that. All right. All right. Again, it comes in the day chart world, so I make it pink.
I've got to credit my mom.
All right. Now, I go to the 240. All analysis comes from the 240 chart. All right. Every bit of it comes from the 240 chart. Let's take a look and see what we look like. We're going to 1, 2, 3, 4, 5 wave. We should be in an A, B, C retracement. So we're in the C retracement to the downside. All right. Structure says that. All right. So I also have a 240 trend here. So let's put the 240 trend on and see where we are there, because that's the most important for me is the 240 trend. All right. So I'm going to pop it up here and we can see this is the trend we got running right here, and it's very shallow.
The beautiful capital city of Spain, Madrid radiates
very shallow.
an
One of the keys to trending is find the support, find the resistance, and prove the heart line. There are always two parts to a trend, the top part and the bottom part. That's not what retail traders do. Retail traders just try to form fit that right on there and say, that's the trend. That's not the trend. That's a and the upper part. If you don't have 2 points, you don't have a trend. You got a channel. All right. This is a very shallow channel, as you can see. But I know one thing right now. I have two opportunities. I have a bounce to the upside to continue the trend, and I have a breakout to the downside to move it down to the downside. That's what I know right now. All right. So I got to be prepared for both of those. So the next stop is putting a Fibonacci on from the swing low to the swing high to the upside. Now I stop when I put Fibonacci's on and say, Mr. Currency, do you know where these lines are? And if they can prove that they know where the lines are, then I know that this target, this target, this target, and this target are good to the upside. But I also need, I'm right here at a breakout. I'm going to need fibs down in this area also. So I've got to go down in here and find a swing low, swing high in this area. All right, so I've got one right here. Swing low, swing high. Right there. I'm going to actually take it up to this one. Let's stop for a second. And again, I stop and I look. All right. Do they know it? They know what that one is. They know that one for sure. Okay. Now I look over here and see where does this extend over here, and you can see they know where that 50% is, 18 is. All right. So they know where those are. I can count on these targets to the downside. Remember, we're target traders. We're trying to find the area we can trade. That means we got to know information. We got to put stuff on our charts. All right. And if you're new and you don't do that, you're not used to that. You're used to being an indicator junkie. Indicator junkies get slaughtered. All right. Yeah, man, I trade a moving average crossover. It works all the time. It only works in a trending market, which is only 30% of the time. That means 70% of the time you are trading a indicator trade setup that is not going to work statistically. All right. All right. So next up is PSRs. Hardest thing for traders to get. Previous support and resistance affect us today. So let me show you what they look like. Here's what support looks like. Support is defined by Tom DeMark, not me. It's one candle that sticks down with two lows on the left, two lows on the right, higher than the low. And if there's a set of twins, the twins act as one. All right? Just the opposite for resistance. Resistance is one candle sticking up with two highs to the left, two highs to the right that don't match it unless there's a set of twins, in which case the twins act as one candle. All right? That's what I'm looking for in the back, past. All right? Now, all right. When I'm looking in the market, if I'm looking to go up, I'm looking for my ceiling. In order to find my ceiling, I've got to find the floor of the guy who lives above me, which is a support in an uptrend in the past. If I break here and I go to the downside, I'm going to have to find the resistance or the ceiling of the guy who lives back here to find my floor here. That's what's hard for traders. It's just the opposite of what you think it is. All right. So I'm going in the past and looking for where that is. I already got one right here that I can do, which is right here. You can see this candle right here as to the left and to the right, and so this one that creates that higher high. So I got two right here. All right. Now going back in the past, I'm looking for a downtrend. This is all an uptrend right here. I've got to go find a downtrend within striking distance of where I am here. All right, this is where I currently am. I can see that 67.54, right, 47.54 right here, and these resistances will be supports if they break into this area, and this is the area I'm looking for. All right, so I can see I got one right here, to the left, to the right, and I don't have one there. I don't have one there. I have one right here, to the left and to the right, and I get one right here. These all create lower highs. This one right here starts this move to the downside, and I got another one right here that creates that lower low, and now I'm below here. So all I care about is this little area right in here. Thank you, Pip. All right, so let's mark these. One there, one there, one there. Got that one already. That one's already picked up in there, and there's one right there. All right. All right, 5 minutes to the option bump at 11 o'clock. All right, now I got to still see if I have any above here on an uptrend. And there's an uptrend, and see if I have any to this top in here. And I'm looking for to the left, to the right. None in there at all. Okay, good. All right. So now you can just, all this stuff has been available to all of you all this time if you'd just gone and looked for it. Can everybody see why this trade worked and why this big trade worked right here? See that? There's a wide open space here. That's all there is. Once they took this out, the trade was all the way to the top, and that's what they did. Then you have to go do it. All right? Yeah, but there's a lot of lines on your charts, man. Yes, there are. And the areas in between are the areas I will trade. That one right there, I'm not going to miss that one. That one right there, I'm not going to miss that. Right here, I am not trading for anybody. I won't trade it with your money. All right, because that's guaranteed to lose your money. If you don't know there's a 382 and two PSRs on here, and you trade into it, it's going to hit it and bounce 70 pips the other way, and you're going to go, the doggone broker stopped me out again. No, the broker didn't stop you out. You traded right into that thing because you were too lazy to put it on. All right, so there's our opportunity. Now, I need to find, we're still a buyer at this point. We're not a seller. We're still a buyer. Until we take this, once we take this trend out, which we've just tried to do, we're still not a seller yet. We're not a seller until we take the support out. So once we take the support out, we will be a seller down to here. All right, if we don't take the support out and we bounce back in, we'll be a buyer up to here. So what are we in right now? In no man's land, which means we're in the weight trade. All right. Now, does everybody understand what I just did? Yep. Oh, there she is. Sorry. Okay, she's back. All right. There we go. All right. You see, now, that wasn't hard. There was no rocket science there whatsoever. No rocket science whatsoever. I now know exactly where I'm looking for a trade. Trade 1, trade 2, and trade 3 to the upside. A break it here, I'm trading 1. I'm trading 2 down to here, moving my stop here, and moving my stop here. See how easy that is? I don't have to make the decision. All right? I just showed you that direct. I showed you support is one candlesticks down, to the left, to the right, in an uptrend. That's what it is. There's no rocket science. It is that, unless it's a set of twins. In which case there are 2 candles here who act as 1. That's it. That's support. There's no rocket science. That's it. All right. So it's not confusing at all. It's not discretionary. What confirms the bounce entry? Well, it depends on where you are, Stephen. If you're an advanced trader, the bounce is the entry. Right? The minute it hits it, you bounce it. If you're not an advanced trader, you wait for momentum to enter in the opposite direction. Very simple. And we have a complete setup for that. All right? So, you know, if you're looking for a bounce and set up that way, we have a whole trade setup here using Bollinger Bands. Most people use Bollinger Bands for momentum. We don't need Bollinger Bands for momentum. We need Bollinger Bands for counter trend trades. All right? So this trade up here, when we breach the Bollinger Band, open and close the candle inside, get an arrow and a painted candle. The next painted candle is ours. It's right there. Our stop is above here, and whatever we get after that is our trade, whatever that is. Breach of the Bollinger Band, arrow and painted candle, follow through, there's our trade. Very simple. Have a total trade setup for it. There is no newbie in the world who should trade that trade. Not one of you who is in here should make that trade. All right? No, one of you should make that trade. Yeah, absolutely. All right, let me try to answer some questions here. Go up to the top. Pippi, I might hold it for a minute. All right, go back up here. Let's scroll up a little bit. I missed a bunch of questions here. I want to answer your questions, folks, but they're scrolling off my screen so fast that I can't get to them. All right. Missed how you already did that. Messy chart, Gary, you're funny. Well, you're going to be here a whole week. You're going to see us do it day in, day out. Day in, day out. It's repetition. You'll see it. Same thing, KJ. We'll look at it again. What are the light blue lines? Those are the supports that go into the future. Whatever was in the past goes into the future. And those of you, most of you watched the video that we do on trading the wide open spaces, how to make massive pips. It's all about finding those PSRs. That's the name of the game. Find those PSRs with the structure of the market. The outer yellow lines are just highs and lows. So that's it. It's just a high, so I don't have to find that candle and nail it. I can put it. So if I'm something I want to put on here, I put it on here on that line because I know that's a bottom. See. No, the black lines here are Bollinger Bands. All right? And there's no reason to use Bollinger Bands except for a counter trend trade, in my opinion. All right, and everybody on this call who's new in here has no purpose in the world of doing a counter trend trade. So let's see what else here. Yeah, I will once I get it on there. On that, what was it? What I just did, not the pound euro. What did I just finish doing? Pound cheap. Okay. Once this makes the decision of whether it's going to bounce or break, I will put HSIs on. All right. So, in a big picture, in the day chart, we know that let's go to the day chart real quick. Again, this is how you figure. You got to look for the structure of the market. All right. So here's the bottom. So the structure in the day chart world is a 1, 2, 3, 4, 5 wave, an A, B, C retracement. Okay. That's the structure on the day chart. So the day chart says we could come all the way down to here very easily because that's what they've been doing. Everybody see that? So that's the danger on the day chart world. We don't trade the day chart. We trade the 240 chart. George Buffett, George Soros, and Warren Buffett trade the day chart. We go down to the 240 chart where we can analyze down here. All right. Now we're a little tighter here, and if we get a breakout here, we can trade it down to the target. As long as we know where this target is. I just put the target on. You saw how I got it. If it bounces here, bounces up and back into the old trend, then we'll trade 1 trade here and 2 trades here, moving our stop at this Fibonacci right here to the target. We have confluence up here of a 382 fib and 2 PSRs as the overall target. That's the overall target. So once they make the decision, I'm either going to put the HSI target tool to the downside if they break down, or I'm going to put it to the upside if they break up. Right now I'm in no man's land, so there's no reason to add another line on the chart until I know what that is. Right? So there we go. Okay, what about pullbacks? What about them? Pullbacks are normal. We love pullbacks. Pullbacks are our friend. We love pullbacks. Most retail traders hate them. We love them because we get to add to our position. Right? We press our winners. Did you see when people were telling you how many pips they made? You're seeing they're making four, 5 trades on one trade, 4 or 5 entries on one trade. 4 or 5 entries on one trade because they're pressing their winners. Right? Yeah, I'll do them again here in a minute. We'll get to all that, Jill. All that stuff will be here. We're here to host a room for Traders Pub. Listen, you just want to sit and absorb like a sponge. You're here for a week free. Everybody wants to go jump in a Ferrari and you can't even drive a Volkswagen. All right? Let's just, everybody stay calm. Let's absorb. The minute you add software to the deal, now you're trying to learn software and you're also trying to learn how to trade. Too much. Take it one step at a time. Let's sit in here, spend a week enjoying the learning about how the market moves, picking up some tips that you never probably saw before, expanding your knowledge, getting to the next level, which is where everybody wants to go. Everybody. So, no, they are, Pedro, they are where they are. You don't try to form fit stuff. You put them where they are. They are, they are. Now, if they're too close together, that means they won't get through this thing, right? That's what stopped them here and stopped them here. Why? Those PSRs have been existing since way back there. They stopped them right there. See? This is the spot market. If you're looking for big picture, Phil, all right, we're looking for big picture. We would draw from big picture, but we're not looking for that. We're looking for fibs to be the part of the target picture, right? All right, that's where we want to find. Where is the target picture? Right? That's the whole key. Because we're not trading the past. We're trading what it's going to do now. I need to know where it's going to go now. All right? And you can see, all right, we only have little fibs in here. Yeah, but do they know where they are? Do they know where they are? Do they know where they are? Absolutely. See, they know where they are. Why? Because they're trading them. All right? Now, are there a big one? Sure, there's a big one from here all the way to the top. That's a big one. Absolutely. But that's not what they're using. They're using these. You can see it. You don't take my word for it. Just use what they show you. The chart will tell you, we know this line. We know this line. We know this line. Therefore, guess what? They know this line. We got a saying here. It's this: if it looks like a duck, quacks like a duck, walks like a duck, it's probably a duck. All right? Same thing here. If that fib's being used, that fib's being used, that fib's being used, they're probably using that fib. See? It is what it is. That's one of them. They try to trade this big trend. That big trend is the big trend. But the 240 is what are they doing now? This is what they're doing now, folks. Do I got to trade what they're doing now? Yes. Listen, you can fight me all you want, but we got 40,000 pips last year. One of our traders got 27,000 pips here. You're fine. I mean, we're fine with that. You can fight me if you want to, but I'm telling you, what we do works. All right? You're going to see. If you're here all week, you're going to see traders making more pips than you've ever seen people making in your life. All right? So you've probably already seen that this morning, just from Friday's trades. All right? So yeah, that's right, JV. And of course, it's your first day here, right? Wait 5 days of this, and you go, I got this stuff. Yeah, I'm seeing that. Okay. Yeah. This is all an area of real concern right here. All right, we got 3 supports right here. Got 3 supports. I'm gonna take it back off so they put it on, but because I'm not there. Surprise, surprise. That's also the S5. All right, you see that? So why do they stop here? Why do they have problems? Because there's too much stuff here. That's why. So what happens if they break it? Then they've taken the stuff out. All right. What if they bounce here? Then they use it as a bounce point to the upside. What do we need to know? What is it going to do? And wait for that to happen. We're in a wait trade on this currency, waiting for it to happen. But we trade pound chief a lot. All right. A lot we trade it. All right. Let's see. Back to where we were. See if we have any opportunities. been going across these wicks up here. You know, I don't know that I got the trend right. I never know if I got the trend right. I got rules for it, though. I am making a set of twins here to the downside. Twins are one candle up and one candle down. What is it? It's called a close and reverse. Close and reverse. Twins are made by big boys, institutional traders. What did they do? They took 20,000 lots that were in a buy. They instantly sold them and put them instantly 20,000 lots into a sell. That's why you get twins on the big charts. Right? And that's one of the things we watch for, because we trade with the big boys. We never want to trade with the dumb money. We never want to trade with the idiots down there in the 5 and 10 minute chart. We want to trade with the big boys. All right? We want to figure them out and wait for them to get in an area where we can get good risk and reward. All right? They can trade without stops. You and I cannot. All right? So let's see. Does a 240 time frame usable? Oh, yes, it is. Okay. Where am I? Is there a direct link to the old video? I think Morgan's got it, Rick. So. All right. You look for a prior uptrend. Alan, you're looking for a previous up. See, bankers do what bankers have always done. So if you want to know what the bankers are going to do in the area, you go back in the past and see what they did. If they were in an uptrend, go back in the uptrend in that area, and you'll find their targets. They're going to use the targets. That's what they're going to do. Why are PSRs so important? Because when the market goes up and respects the fib and breaks down, then it becomes a PSR. What does that mean? That means it was a fib, it's now a PSR. So how strong is it? It's a fib and a PSR from the past. That's it. How do we determine when you put where you put the fib? It's always a swing high, swing low, Dwayne, of what you're trying to do. But you use fibs multiple ways, and that's a learning process. A learning process. You're not going to learn that in 2 minutes in here. All right? It's a learning process. We use fibs for tons and tons and tons of things. All right, you'll learn it as you hang in here for a week. We'll show you. That's how we develop roadmaps. We get a currency going to target. When we get in a big area, we're going to find a roadmap for it. Okay. Yellow channel is nothing more than a top or a bottom. Okay, that's it. Top or a bottom. So you don't have to go find and put it right on that wick. You just find that yellow line as the top. All right. Exactly. A pullback, if it's going up here, that's a pullback. That's a pullback. That's a pullback. That's a pullback. Okay? Now, that means everything in an uptrend when you're headed this way up to this one. These are known mathematical values. Bankers don't trade and turn in the middle of nowhere for nothing. Well, I think let's all trade here. What do you think? Let's exit here. They don't do that. They go to a mathematical number, stop, and then they make the decision. All right? Your job is to find the mathematical number. All right? That's putting PSRs, that's putting fibs, that's putting trend lines on, it's doing all that stuff. All right? And what happens to traders is they're stinking lazy. What do they want to do? I want to trade an indicator, man, that new moving average crossover. And I want to sit in here and I want to push the button.
You push the button! I didn't tell him to push the button. Did you tell him to push the button? No, I didn't tell him to push the button. I didn't tell him to push the button. You shouldn't just go pushing buttons. You don't go around pushing straight buttons. I tell you, don't push the button.
And entered the sell. Is that important? Yeah. That means the big boys are trying to sell this into this area. That's my area. That's the wide open space. You see that? That's the wide open space. And then there's one right below it. So if I get in this one right here, I do not exit the trade, wait for the break hook and go here and double my position to the downside. And every time I get a rally, I'll sell again. All right? The pullback or the retracement becomes my friend. So let me show you something real quick here. Why? Let me just check currencies real quick. See if we're going to get an opportunity. All right. So you see, no opportunity here, but did we nail the target? Yeah, we nailed the target. Okay. GJ. Okay. GJ, we're looking for the opportunity here. And come on, baby. All right. GJ, right down to the target. And we missed this trade this morning because we were fiddle farting around with other stuff. And that. All right. Normally, when we don't have this many people in the room, everybody knows what to do. Nobody asks questions. They get through it, so we're ready for the trade. All right. That's what ends up happening. So tomorrow when you come in, if you'll hang loose with your questions, we'll get through the currencies and maybe we won't miss a trade like that for 60 pips, right? Which ticks me off, right? So, but we're down there. We're at 165.20. We only have 20 pips on the GJ. Our stop is up here. Can we make the trade? It's very simple. You can't make the trade. But you know where it's going, man. My stop's got to be here. There's my entry. There's my reward. Risk, reward. Can't take the trade. All right. EJ. I wish I could. EJ. Gee, I wonder if they knew where the target was. I don't know. Daggone it. The stupid Scott, he's so lucky. Went right down to the target. That was trade number 1. What's trade number 2? Right here. Where are we at? We're in position now for trade number 2. Now, had we been able to have been watching it and not fiddle farting around this morning, we could have maybe got this trade this morning to the downside. We would now be up 30 pips with our stop at break even and looking to double our position in here. That's what we would be doing if we hadn't missed that trade. But we missed the trade. Now, what does that mean? Now we only got number 2 now. We missed number 1. All right? So we're watching this, and you can see they're still pushing it to the downside. Pushing. All right? So we'll see if we get it. Now, what do we do when we hit support? We got to have a break, hook, and a go. It has to center again. It has to come back up and center. All right? It's called squaring up. All right? And we'll talk about squaring up as the week goes on, all right? I don't have time to do everything today, folks, all right? Just like all of you think, I'm going to go in here and I'm going to learn to trade in 3 days. It ain't going to happen. And you can't be a trader in 3 weeks. Get it out of your brain. I cannot be a trader in 3 weeks. Therefore, I need to commit to the process, just like a doctor does. A doctor says, hey, I'm in this thing for 8 years in school and 2 years in residency, and I'm going to come out of there with $500,000 worth of debt. And he commits to the process, and guess what? Within 3 years, he's breaking even, and from then on, he makes money. All right? So you do the same thing. Commit to the process, and in 3 weeks. Get that out of your head. All right, looking for a break, hook, and go here on this EJ, and if it does happen, we will take it. Now, it is late in the session, folks. All right? It's a little late in the session, so we've got to be very careful when you take trades this late in the session. We'll see. All right, we'll watch it. Somebody keep an eye on this EJ. And let's see, back to the UJ. It took the target out, and now we're looking for trade 1. Again, this was a trade we couldn't make. We were in front of this all morning and couldn't make the trade. All right? Just could not get that trade underway because of risk and reward. All right? So that's the way it goes. Sometimes that happens. You got to deal with the real estate of the day. All right? So that target's now been taken out. We see a dashed line. It means that they took the target out. Where's our next target? 171. We're at 101.18. Anybody interested in 50 pips? Because that's what that is. 50 pips. What do I need? I need a break, a hook, and a go. All right? Yeah, but man, I don't want to wait for that break, hook, and go. As it goes, I might miss this trade. 90+% of the time, it's going to break, hook, and go because the market retraces. Over 90%. Why would we make a methodology that happens only 1 out of 10 times as opposed to doing something that happens 9 out of 10 times? But retail traders do this all the time. Oh man, there it goes, I'm in. Oh, wait, you're going against me. Oh no, oh, stop that again. Doggone broker, stop me out again. No, you didn't pay attention and wait for the break, hook, and go. All right. So we're waiting on this UJ, and it'll be trade number 2 if we get it. So we'll see. And British pound, it never gave us anything this morning. This is the British pound's having trouble. And we're too close to the target to make the trade here. Remember, we wanted this trade, but we couldn't get it in there, and there it is. Got it. That drives me crazy. Right. And we're just not getting any momentum. Now, you know, one of the things that happens is it's Monday, all right? Now, Monday is construction day, all right? If you're new in here, you don't understand, but the market makers have got to build the market for this week, all right? So that means Monday is a dangerous day to trade. Monday. Can't trust that day. We have a bear flag break and no follow through. All right. Notice the break, hook, and go. Can everybody see that? One candle down, that's the break. The green candle is the hook back up. There's the red candle for the go. Everybody see it? Break, hook, and go right there. What's the problem? The problem is it's no momentum driving this thing. We need a bright red, all right? Because without them being bright red, there's a good chance of doing this. Because that means there's not enough support for the move. All right? Not support in terms of support, but there's not enough favor for the move, I should say. All right? There's not enough favor for the room. And one of the reasons is there's just no room down here. All right? So we got to walk away from the British pound. All right, let's check and see what they're doing with dollars. Nothing. Selling off a little bit here. That's all they're doing. All right, so we're interested in this AJ. All right, AJ is in position here. We're at 8,900. We got to sell it below 8,900. All right, they have popped down here with this wick. See that? So they have done that. All right, so they've come down and they're all the way back up now. So if we get a trade to the downside, we can take this trade. All right. One thing to know is Aussie currencies move all day. All right, so you can trade Aussie late in the day. You can't trade all of them. You can trade New Zealand's and Aussies late in the day because they will move all day. New Zealand in it, you can trade it late in the session. You can't trade anything else. Right? So, and you know, we're trading the New York session. The New York session is the hardest market to trade. That's the market you want to learn in, because if you can learn to trade the New York, you'll be able to trade any of them. All right. Waiting for momentum come to the downside. Now, you know, advanced traders aren't waiting for this stuff, folks. They're already doing their thing. All right. This is a good trade right here for those advanced traders. But for all the rest of us, we're all newbies in here. A lot of newbies right now, and so because there's a lot of newbies in here, we got to pay attention to the rules, and we were trying to give you the safest trade. The RF1010 trade setup is not the best trade, folks. It is the safest trade. And as a newbie, you need to be safe. Now, should we have any qualms about selling this if we get it? That's bright red. 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 Scalpers are on that 5-minute. Intraday traders are on the 30. Bankers on the 240 and the 60. All right? And we trade the 240 and the 60, but we enter on the 10. Every trader, scalpers, intraday traders, and big boys are sellers on the Aussie yen. So what should we do? We should sell it. Why? Because the chart says to sell it. Not because I think it's going down. Your thinker is what gets you in trouble. You don't think. The market says you need to look for that sell. If that sell comes, you need to take the trade. Will you win on the trade? I don't know if you'll win on the trade. I don't ever know. But we win more than we don't. 700 trades last year and 60 losses. So if we get it, we get it. I can't make it move. If I could make it move, I would make them all move. I can't. So that's the trade I'm looking for. Get this mistaken that Scott's calling a trade. I'm not calling a trade. I'm showing you what the methodology says, I'm showing you what the software says, and I'm showing where the targets are. The decision to make a trade is 100% yours. All right? And if you're in here because you think you're going to be in a trading room, you're wrong. All right? We're not a trading room. All right? We will take all the trades there are. We will teach you how to be specific and cherry pick those trades so you can conserve your margin and you can make money long term. And you can start making the kind of pips you've already seen people recording already. Right? You can. But you're not going to do it in 3 weeks. So, but you will learn a lot. You're going to be here a week, and you're going to learn more in this week than you probably learned in the last 2 years. All right? All right, so trade 1, right here. Little small trade. Then the big trade is here. All right? Anytime you have a small trade, you only trade 1/3 of your lots. And then when you break out of the new area, you trade 2/3 of your lots. And let's discuss this. When you're trading, always, you trade units of 3. So whatever that is for you, if you can trade 3 minis, all right, let's just use 3 minis as an example, then this becomes 1 mini, 1 mini, 1 mini, all right? Your first trade is always 1/3 of your lots. Never the whole thing. Never put all your eggs in one basket, all right? And that means we're going to have to scale in because we can't make money with only 1/3 of our lots. Therefore, we look for areas where we have a wide open space that allows us to put these 2/3 in the trade if the trade proves itself. That's how you do it. All right. Now, because you're only putting 1/3 of your lots in, and you would normally have roughly a 30 pip stop. Let's talk a 30 pip stop. If you're only putting 1/3 of your lots in, your stop could actually be 90 pips, and you would still be within your risk and reward and your margin requirements. All right. And so you use a greater stop for the first trade, which is 1/3 of your lots, and as soon as you add 1 or 2 of these, you move the stop. If you put 1 in, you move the stop halfway. If you move all the other 2/3, you move all the way to what the stop should be. All right. Now, what that'll do is stop you from being stopped out on the pullbacks when they first go and they're not ready to go, and you moved a little too early because you're still young in the market. But when it goes, forces you to press your winners. And pressing your winners is a rule. You must press your winners without exception. What does that without exception mean? It means without exception. That means you never don't trade without adding to that position. All right? If you can't find a spot to add to the position, you better rethink your original position. That's all there is to it. All right. EG, nothing is still going up. All right. Yo, Ozzy, remember we talked about this morning. More than likely, it's going to have to come up to the top, and we will sell it off the top. What is it doing? Going to the top. What makes it do that? Structure. 1, 2, 3, 4, 5. What do we need? An A, B, C. All right. So we're not the B. You walk away from it because the C is next, and that's counter trend going against you. If you trade B, most likely you'll be stopped out in C. Oh, the doggone broker stopped me out again. No, he didn't. You took a trade you should never trade. Why? Because I'm looking for a trade instead of looking for the structure. All right. CAD yen. Ooh, it's coming in. Come on, baby. Come to Papa. Okay, now just take a quick gander here. Sell. 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 Downtrend. Movement to the upside. What do you think? Think we ought to look for a like a duck, quacks like a duck's probably a stinking duck. All right, where's the only problem? Potential head and shoulders. All right, where's the left shoulder? On this line right here. Break of this line takes the right shoulder out, which means a break, hook, and go here is a trade to here, and then down to the bottom of the channel. All right, everybody see that? Trade 1, trade 2. There it is. All right. You got to wait for that to happen. I don't want to wait, man. I want to push the button.
You push the button. I didn't tell him to push the button. Did you tell him to push the button? Oh, I didn't tell him to push the button. I didn't tell him to push the button. You shouldn't just go push a button. You don't go around pushing straight buttons. I tell you, don't push the button.
Don't push the button till your trade gets here. It's not a trade yet. It is looking good, but it isn't here yet. You've got to take that risk out. What happens to traders? They major in reward, not risk. Why? Because they don't even understand risk. Right? They think their only risk is what is my stop. That's minimal. That's the least part of the equation. All right. All right, we're testing the bottom here. Remember, we're interested in this break to the downside if we can break below this line right here. So, because that's still a bounce point. All right. See, there's not enough room here to make money. There's only 20 pips. All right. So I want to be a seller below here, and I don't want to miss this opportunity. Everybody see this opportunity right there? There's the opportunity. I don't want to miss that wide open space. All right? And I'm very close, as you can see. Well, if you're that close, man, why don't you just take it? There's the risk, reward. There's the risk. Can I make that trade here? No, I can't make the trade here. The decision to make a trade is always risk versus reward. It's not whether I got a trade set up. I could have trade setups all day and not have risk and reward. But if I take a trade setup without risk and reward, I have asked for them to take my money. And the name of the game is keeping your money. Come on, baby. My charts are slow this morning. All right. Now remember, we talked about this before. All right. Be careful. We don't have any momentum. What they might do? That means they may go sideways here. What are they doing? going sideways here. Oh, I see. How did you know that? Structure, structure, structure. All right, but now we're far enough away to make the turn. If it makes a turn, we can make the trade to the downside. What do I need? I need a set of twins. All right, that's what I need. I need them to close in reverse here. All right, close in reverse here. I'm interested in this trade, 1875 down to 85.17. 85.75 to 85.17. All right, so basically 60 pips to here. Break hook and go here. I'm interested in that trade. Trade 1, trade 2. All right. If you don't have this line on, you don't have this line on, and you don't have this line on, you can't even see it. Can't even see it. And see, a lot of people made this trade here because they didn't know that was there. See, they didn't know that line was there. What happened to them? They just got stopped out, folks. That's a 40 pip move to the upside. They just got stopped out. Oh, gee, the broker stopped me out again. No, the structure said they're going to go back up. Don't trade it at the bottom. Smart money does not trade at the bottom. Smart money trades at the top. They're at the top. Ah, we're the smart money. We're looking for the opportunity to here. Let's see if we get it. If they can turn that thing, we will take it. Or I shouldn't say we'll take it. I say it is there for the taking. You decide whether you want to trade it or not. I can't tell you to take a trade. I can tell you that what the methodology says. I can tell you what the system says, and I can tell you what the charts say. I can't tell you anything else than that. All right, so we'll wait and see. I kind of keep an eye on that pound Aussie. Put a little note on that one real quick. All right. And let's see if the Euro New Zealand, there wasn't anything on here, but we'll just check it and see if it's gotten in play. Now, we're looking at break up in here, and you see it is bouncing up here, but it's got a long way to go. It's got 40 pips, so it won't happen until tonight, but we will be interested in that tonight. Now, what happens is we will identify this in a session recap. At the end of the day, we will go through, we will record what we're looking for to happen in the later sessions. All right, this will be one of them right here. Above 6,700 up to 6,808. So it's 108 pips up here. All right, that will be a session recap. Look for this trade. If this trade happens and traders make the trade, it will be counted. Why? Because we identified it here. We identified it 15 hours before it'll happen. All right? We identified it here. Traders made the trade. We only count it if traders make the trade. Let me tell you, lots of times we identify this and no traders make the trade, and we don't count them. All right? So there. All right, so real quickly, that's it for imminent stuff right now. All right, still not getting a bounce here. As I told you, this thing may go way, way deeper. All right, because here's the structure of the currency. You can see the structure right here. There's a 1, 2, 3, 4, 5. A, B, C. Where is C going to end? Here? Then we'll look for the bounce. What if it ends here? Then we'll look for the bounce. What if it ends down here? Then we'll look for the bounce. You see that? Structure says don't even think about making a trade here until you get the bounce. All right? So you can open that chat up now, Pip, again. All right. I'm going to shut these charts down and re-open them up again. I just popped it back open again, Morgan. Thanks. It was running slow, so I tried to dump some temp files. It should be all right now, I think. All right. Does a hook have to fully retrace? It has to go halfway, Mike. That's why we say center. Center is 50%. It's got to go 50%, and then it's all about risk and reward at that point, right? See? Risk and reward will tell you whether that's enough, all right? So let me see if I can catch up here. How do you determine where to put the fib? Yeah, you put it on swing low, swing high. Okay, let me talk about anything that you got to do in the charts, whether it's fibs, whether it's PSRs, whether it's bear flags, bull flags. inverse head and shoulders, whatever it is, it takes 300 done at one time for you to build a database. Most traders don't do that. What they do is they go in and try to draw everything. That's the absolute worst way to do it. You create mud in your brain. Your brain needs 300 images to create a database. That database then must have 24 hours off where they don't do those charts, don't do those patterns, and to build a retrieval system. So if you want to learn how to do swing high, swing lows, which is to find the legs, all right, you got to go do 300 at one time. And then you got to take 24 hours off. It's called reticular cognition. If you don't do it that way, you have created mud in your brain. It has no way to get a retrieval system to the correct database, and you will now be in a jam. All right. So let's see. Pick out the targets you up to. I look for a pre. I already did that. Okay. Phil, the only thing I would point, that's okay. I think I'm through all that stuff. All right. There we go. Chris, we don't play anybody else's stuff in here. Sorry. All right. Okay, Steve. All right. After being Scott for 7 months, I can tell you that the sooner you stop being an indicator junkie and learn market structure, you will have won 90%. AJ Short is valid at the break of close below 8,900. I don't know. We talked about this. Still is broken. Yeah, it is 8,900. All right. And we got to take the support out. And you see that, Vaughn? It's not just enough to say below 8,900. Right? You got to take the support out, which means you got to break, hook, and go. And now you're looking for the 88.15. All right? Unless it does that, you don't have a trade. See? Why? Because you have rules. No, I don't have rules. As long as that's a bounce point, you're in danger of the bounce. As soon as you take it out, which is to break, hook, and go below that 88, 86, below 88, 80. Really, 88.80, really. So they are meaningful to us because they allow us to define the desert. Let me show you that. You saw that in the initial intro video where we talk about what is the desert, okay? The desert is the area between the moving averages, okay? All right. So here's this moving average comes from the 240 big boys world. This green one comes from the 60 minute. Who trades the 240 and enters on the 60? Big boys, okay? So in order for me to be with the big boys, all right, if I'm below the moving average on the 240, I have more sellers than buyers on the 240. But if I have more sellers than buyers on the 60, I then have more sellers than buyers on both the 60 and the 240, which means I'm with the big boys. All right. So the desert is the most dangerous area to trade. All right. So our moving averages are important because that's why we get this trade. That's why we get this trade. All right. Because we have more sellers than buyers. See? That's it. William, I'm just using the software that comes with the presentation. I mean, with this platform that we're using here to present. That's it. Okay, thanks, Perry. Yeah, we have a lot of traders in here, and that's kind of one of the reasons. It's the bandwidth is being eaten up pretty good. All right, Rich, nice job. How do you know if you're drawing the right support and resistance level? You've got to go do 300 up, Chris, and then you got to do 300 down. And then you got to check to make sure that they did go to your lines. All right, just like in that video you all watched about the wide open spaces, how I went and checked them. You got to do that. How much time is that going to take you? Probably about 30 hours of work. Oh, really? Yeah, about 30 hours worth of work. You don't need it. It's intuitive. We have demo. We have videos everywhere. All right? But we're not here to look at the software right now. We're here to learn to trade, folks. Do you want to multiply the amount of information you have to try to assimilate in 5 days? No. You want to learn to trade. All right? You want to learn how did these people make 40,000 pips a year? How did they do it? And that's what we're here to show you. It's costing you nothing. Take advantage of it. We're going to show you there's no secret sauce here. You know, I hate those websites that say, we got the secret thing and nobody's got it, and, you know, without us, you're going to be, you know, that's bunk, right? You trade what the world trades, right? But you got to know how they do it. Forget all that stuff. Well, we trade a moving average and a slow stochastic with the RVI, and we got the RVI that nobody's got, and it's all junk. It's junk. Learn how the market moves and trades, and learn how to do that. It's price action. Right? On the 4 hour, Allah, you use the PSRs on the 4 hours. Okay. Yes, you can. You can do that, Robert. We have a couple of people who are colorblind. Yeah. Gary, that's an internet issue on your end. We're presenting. My computer has 10 megs of RAM. Has it's a RAID server. I'm not on a computer. I'm on a server. That's it. And I got 60 megabytes of speed per second. So I got a monster machine with monster ability to send it out. Now the problem is that wherever you are in the world, it's got a throttle on the throat, right? And that's what ends up happening. So half the people in here see everything I do and hear everything I do when I'm right. The other people don't. If you live in Thailand, it's 5 minutes before you see the last screen. You know. So what is the wide open space and how do you know? Well, I think we've kind of showed you that all day. All right. It's when you get done doing your lines. All right, let me pop up stuff here real quick, just so you can see it. These are old stuff. When you get done doing your lines, you will end up seeing areas like this ahead of time. In fact, let me just pull it back. All right, let's pull it back here. All right, now, can everybody see that if I'm trading in an uptrend and this breaks this right here, there is my trade. That's a wide open space. The only thing to stop it is a 214 fib, and that's the place I will move my stop, and I would break that because I have enough room to here. I will double my position. Everybody see that? It's very simple. That's as easy as it gets to see. All right? Always. Now, what have I said, Brett and Jeff, all day today? Press your winners. That's add. Add on to your winners. Okay. You got to do it. It's without exception. There's no such thing as I don't do that. No, you do that. All right? So there's the two-part trade, 1 and 2. I will add in 2. All right. What did it do? Right up there and right to the target. See that? That's the wide open space. How is it determined? You got to put the lines on. If you don't put the lines on, you don't even know where the wide open space is. See? That's it. Not hard. There is no rocket science in the Forex. All right. What happens is traders make it hard because they want to add all this other crap to it. Right? Oh yeah, but I need to go to Forex Factory and find out what the latest setting is on the RVI because the market has changed since last week. Forget that stuff. Beginning class is open. It is open 24 hours a day because the beginning class is already recorded. There are 6 lessons there, apprentice. But the main thing is we will have an Endeavor class tonight. We're talking about maybe inviting all of you guys in. It's an advanced class that we do every week on Monday night for our traders. But we're toying with the idea of maybe sending you an email and asking you to join us. So we'll have that decision made right after this is over. Depends on this, you know. Basically, it depends on whether this group of people is at a level that they can handle those kind of things in general. So. Can you draw certain wavelines on a clean chart with any other line? Yeah, you can do whatever you want to, but you need to be able to see the picture. It's called reticular cognition, Nexter. That's what happens to traders. They think, okay, this is I don't want to do that. I want to do this. I want to do that. And so what do? They're not dealing with reticular cognition. Reticular cognition means I can look at a chart and see it instantly. Why? Because I see all the parameters of that chart. All right, that's what a trader does. All right. A trader sees the parameters. He then works from that position and says, can I prove that? Now, as you take information off, you no longer have that. And that's what ends up with traders. They don't have the information they need to make a good business decision. Therefore, they're at the whim of the market. And because they're emotional traders, they don't make trades based on a business decision. They make it based on, I think it's going up, I think it's going down. As soon as it starts to waffle, they freak out and they bail on the trade, and that's why the average retail trader only makes 5 to 8 pips a trade. So what can I do to prove? You go back in the past. All right, you go back in the past and put your lines on that are from the past, and then you go and see if the market moved to them. That's how you do it. Well, what that means a lot of work. All right? A lot of work. Here we go. Look at this move. All these come from the past. All right? So did the market, this is a big wide open space. What did the market do? Cranked right down. All right? So let's just take a look here. We had our last, all right? So the market break, hook, doesn't go. Builds a bear flag up to the top. All right? Why? Structure. All right? We got a 1, 2, 3, 4, and we're in the fifth wave to the downside. All right? Trying to do the fifth wave to the downside right now. All right? So where did they go? All right? See, when it broke here, they went to here and then to here. See that? Proves. That's what they did. They went to here and then they went to here. All right? Then they ran out of sellers. So what do? They got to go up and find sellers. That's an ABC retracement. That's exactly what they're supposed to do. Up here at the top, they sold off immediately. All right, this target's gone. This target's gone. Where are they going? Down to the next one. Where'd they go? Down to the next one. You see? That's how you prove it to yourself. Oh, you mean I can actually tell where they're going ahead of time? Duh, that's the whole point. Yes. What we can't tell is how quickly they're going to do it and how long it'll take to get there. And that time is a factor. But the targets do not change, right? Sometimes we're in trades for 20 minutes. Sometimes we're in trades for 4 hours. Sometimes we're in trades for 3 days. How long can you stay in a trade that keeps going your way? As long as it keeps going your way. If you notice this morning when we were talking about session recaps and the traders are going still in, still in, still in. I'm already up 250 pips, but I'm still in this trade. Why? They're still in because it's still got room to their target. See? So let's see. Well, we don't trade it live in a room. Most of us trade the Asian session, Scott, but we don't trade it live in a room. But that's the reason that we teach in the morning, so that when you learn it, you can trade the Asian session by yourself. You can trade the London session by yourself. You can trade the Singapore session by yourself. That's the whole point. See? All right. Jack, divergence in the GA. I don't know. Let's go look. Oh. I don't have a chart to show that, so I had to make one real. Oh, divergence, we got convergence. MACD trending down, candles trending down. That's divergent. If the MACD was trending up like this, and this was going down, that's divergent. Convergence is when the MACD is trending down and the candles are trending down, we have convergence to the downside. Right? It's like over here. Convergence to the upside. Candles trading to the upside. See? That's it. So we don't have divergence, we have convergence, which means continuation. All right, let's see. They're not over there yet, Amanda. They're not really tied into that part. We're here for for Morgan and his group. So we just hold off, Michael. Just hold off. You don't need that, you know. So. Zara, I've already done that. I think twice now. I've done the blue lines. I don't know if you were not here or you were sleeping through that, but I've already done the blue lines twice. All right. Let's see if I can catch down. Maybe we'll do another chart here if we get time. We look for it on the 240 primarily, Jerry. We give a cursory look to the day chart just to know where we are in terms of tops and bottoms. 60-minute confirms where we're trying to go. Remember, the big boys, they analyze on the 240 and, of course, the day, but mostly the 240 for intraday. They analyze on the 240 and they enter on the 60. Don't believe me? What does the commentary say? The hourlies are overbought. The hourlies are oversold. Why do they care what the hourlies are overbought or oversold? Because the big boys enter on the 60-minute chart, the hourly, right? So because they enter and exit on a 60-minute chart, we figure out where they're going on a 240 chart, and then we look at the 60-minute chart to make sure it's confirming the same deal. Once we know that, we're then looking down on a 10-minute chart for an entry to the target off the 240 chart. So we're trading the 240 chart. We're only using a 10-minute chart to enter. That's it. And by the way, the 10-minute chart gives the least amount of false positives. All right. there is no default position on MT4 for the 10-minute chart. It's a 5-minute or a 15 because the 5 is too much noise. The 15 is pretty slow. So the 10-minute is the best one, but it's not the default time compression there. Doug, we have private. These are our charts, and this is we created these charts because we couldn't get MT4 to do it. All right. We don't mirror trade, Mir. We don't. Here's the deal. Why would we want to mirror trade if we're trying to teach you to trade? That makes no sense. Mirror trading is, I don't have to teach you anything. When I enter a trade, you go in. Nah, we're not into that. Period. I think it's absolutely not something we ever want to do. All right. So 11 there are option contracts every half hour in the New York session. It's a Chicago Mercantile Exchange product. Every half hour, starting with the 10 o'clock cut in New York, there are option contracts expiring. If you look up there in the notes, you'll see Pip has posted all the expiries for today at the 10 o'clock cut, right there. You see them? All there. And there's one like there's 500 million on the Aussie at 88.50. A $500 million Aussie went on 8700. There's a $1 billion payoff on the U.S. dollar at 102. Right? These things affect the market, and they affect the market every half an hour. So because of that, until the half hour is over with, nothing happens. And then all of a sudden, the half hour is over. There are no option contracts. A half an hour sprint to the next target. And if you didn't know that, you know that now. All right? And it's not a problem in London. It's not a problem in the Asian. It's a Chicago mercantile product. That's why. So that's what happens. All right. So where are we here? Still trying to answer questions. We don't play audio messages from traders, BM. We don't do that. Sorry. That's a distraction. So don't bother to even do it. We won't play it. Yes, they are. Everything's published. Once, Ozzy, but they may do it 2 or 3 times. But you know, they'll do them over and over again. So here it is. You know. What's a break, hook, and go? A break, hook, and a go. All right. They didn't find enough sellers, so what do? This ends up being a bear flag, and they go back up to the hook again, and there they go. So there's 2, 1 and 2. All right. Now, if you took the break, hook, break here, and you're in the hook here, your stop would be up here anyway. So even if it didn't do it, you'd still get the second trade no matter what. The problem is that a break, hook, and go, there's at least 1,000 versions of them, at least 1,000. So it's that process right there that can look like anything. Right? It's a matter of breaking support or resistance. Right? Now, they have to do that because they've been consolidating. Right? Here they're consolidating. Right? You can see they're taking buys, they're taking sells, they're taking buys, sells, sells, buys. Okay? Now, when the market breaks to the downside, all the buys they took are upside down. It's toxic waste. So when it breaks to the downside, they immediately bring it back up, hook, to dump the buys, so that then they put those buys that they own into sells. Of course, all these buyers are stopped out, and down they go. Now, if you go look for this pattern in the market, and I would advise you do this one about 1,000 times, you will never ask the question again, do I wait for a break, hook, and go? The answer is absolutely. See? Yeah, if we get one here, I'm hoping we'll get one here. We could do one on this one right here. All right, so let's talk about the British pound. Let's make sure it's not up. There it is. Okay. All right, so how would we do this one? All right, first thing is when we get the break, hook, and go, we enter, but we won't trade it into the 65.50 because of the option contract. We trade it below it. All right. When we get down below it here, we've already had a break and a hook. So there's the go. That's the go part. You enter that trade right there. I need to have a roadmap down to the target. So how do I do that? I go up to a 60-minute chart. Let me get the current here. Right. I go to a 60-minute chart, and I find a swing low, swing high in here. Swing high, swing low, right there. That's going to give me Fibonacci extensions down in this area. All right. I know where the target is. It's the 63.81 and the trend line. So I need to have a way to be able to trade that. So I'm going to click from swing high to swing low. All right. So the first trade is above here, and the first your entry is here, your stop is here. All right. So when I hit the 618 fib, my stop moves down above the 270 fib, hanging on there. All right. We'll look for a little break hook and go here at the 6400. If you take this down to a 10-minute chart, that's what you're going to see is a break hook and go at that. And then when we get down below here, we'll double our position right here. All right. And we'll move our stop again at the 1270. All right. And at the 6350, if we break, hook, and go here, can you all see them? Then we will double our position here, move our stop initially here. As soon as it gets underway, we move our stop above the 63.54. It's all about where are the fibs. Now, I'm taking those off the 60-minute chart. Why am I doing that? Because the big boys trade the 60-minute chart. So I got to know where they're doing it. All right. We don't tell them they're proprietary, Randy. We wouldn't give them out if our life depended on it. Well, in the big picture, they're all blips on the screen. But in the daily real estate, Roger, option contracts stop markets totally. All right? And because they stop markets on even numbers, okay? Even numbers, that's why our stops are always on a 3 or a 7, never on a 5 or an even number. All right? If you look at those notes up there, you'll see that there are option contracts. The only other number that you're going to see in there other than a 0 is a 5, like the Euro cheap, 22.95. All right? See that? US dollar cheap, 89.25. Okay, option contracts sit on 5 numbers. You don't want to put an option. You don't put a stop on an option contract that they're trying to hit. You see that? It just makes logical sense. If they're trying to hit that number, why would we ever want to do that? So you can't, Dave. That's why I'm not an Elliott waiver. I count Elliott waves, but I don't bank on them. I count them. I need to know where I am in the structure, but I'm not. It takes 2 years to learn to do Elliott wave by itself, just to learn Elliott waves. 2-year process. All right. What platform? This is our platform right here. You're looking at our platform. We've created this platform. Why? Because you couldn't get the MT4 to do it. MT4 is not designed to do that. All right, so now you see the bridge pound did take out our target here. We didn't have any opportunity to trade it, though. We couldn't trade it. Much as I wanted to trade it, if the risk and reward is not there, folks, I don't trade trades that aren't there. All right. So what do we need now? We need them to pull back up. If they pull back up anywhere up in here, all right, this target's gone. That means the next target is here, and then the next targets are down here. All right. Now, if it pulls up in this area, I got to be far enough away from the 6,300. What did they do at the 6,300? They stopped dead. They're going to be high enough here so that if I take the trade and it goes here and doesn't go any further, I'm at break even. Everybody see that? It's about majoring in risk. If it breaks, hooks, and goes here, I take a small position here because I got a small one, but I will take the bigger position here for that trade right there. See, the chart tells you exactly how to trade it. Once you do the lines, you know exactly how to trade it. You don't have to guess, what do I do? Maybe I should add one here. No, you don't have to do that. You add one where the chart says to do it. The chart is El Jefe. You'll be both, Carol. Eric, we don't give the moving averages away because they're proprietary. We're one of the secrets to why we work. Right? If you could define the desert, the area you should never trade in, wouldn't that be a nice thing to know? Yeah, that would be a nice thing to know. Well, we have the ability to do that. Why would we give everybody that information? Right? It costs us millions of dollars to create this stuff. Right? So, you didn't get the 240 and the 60. All right? The big boys, intraday traders, are trading the 240 chart. The bankers, all right? The people who make this happen. Who are they? I'll pull it up for you. There they are. All right. You can see Deutsche Bank is number 1, Citibank is number 2. All right. They control 30% of all the trades made in the Forex every day are made by those two guys. All right. Which is why you'd never want to trade the Frankfurt market because Deutsche Bank runs the Frankfurt market. Whatever they want to do, they're going to do. All right. Well, you could have the best looking uptrend in the world. If they want to go down, they're going down. So you never trade that. All right. They cover 30%. 5% of these guys right here control 92% of all the volume. All right? They're the ones who make the candles. Nobody else is making candles. You and I couldn't make a wick on a candle if we tried. Right? It takes billions of dollars. In order to move the euro dollar, 1/2 a pip in the New York session takes on average $35 million. That's a move at 1/2 a pip. All right? So you see how much money it is? We don't have the money to do that. Only big boys do. That's why you got to find out what the big boys are doing. They figure out their trades on the 240, but they enter on a 60. That's why we use the 240 and the 60. So we trade the 240 when the 60-minute says they're going to make the trade right now. Right? But we can't trade the 60-minute because the stops are 100 pips. So we got to go down to the 10-minute with a 30, 40, and 50 pips, where we can control our risk and trade with them. That means we got to nail the entry only when momentum comes into the market. If momentum isn't here, it's too dangerous to trade. That's all there is to it. So tell us your thought on a 50% retracement. It is the greatest opportunity to add to a position there is, because the risk is so small. How many pips do we lose? We lost 60 trades last year. Actually, Pip knows how many pips we lost. Wasn't that many. Our average loss is 31, 32 pips, so it takes 60 times 32. About 1,800 pips for 40,000. None yet. We missed two. We missed two because of all the questions. We missed the pound yen and the euro yen, and I hate missing a trade. Let me tell you, I really hate missing a trade. But everybody would rather talk and chat than find a trade in the early going of the session. So, unfortunately, because we try to answer our questions, we're trying to hang with you and help you. But hopefully tomorrow you'll learn. Hold your questions. We got lots of time in the latter part of the session to answer a million questions. Right? In the beginning, when the market's trying to move, we want to try to catch the trades. We missed two. We missed the pound yen this morning. Nailed this. We know exactly where it's going. So we're going down here, and then we're going down here. What did they do? Did both of them. We couldn't find a way to get in it because once it got underway, the risk and reward changed. All right? We couldn't make this trade, even though we knew it was coming down to here. We knew that. Why? Because we had to trade. There's the break and the hook and the go. All right, so there's the entry. There's our risk. So here's our risk. There's our reward. We can't make that trade, so we didn't make the trade. But we said we're going to here, and then we're going to here. We knew where we were going, but that's just what happened. And I hate that. When it's just our traders in the room, we don't miss those trades. We won't miss them because everybody knows not to do that. But everybody's new here, so we're all learning. It's okay. We're all learning how to handle the room. Everybody's trying to go, I want to learn, but I also want to trade. Why, you make a trade, Jay? Can you make a trade? Can you make a trade? What do people want to do? They want to push the button.
Hey, you push the button. I didn't tell them to push the button. Did you tell them to push the button? Oh, I didn't tell them to push the button. I didn't tell them to push the button. You shouldn't just go push a button. You don't go around pushing strings buttons. I tell you, don't push the button. You don't know.
Don't push the button until your trade gets to you. All right, so all of it does, Michael. Technical analysis does everything. Yeah. I kind of watch the IBEX a little bit. That's a Spain because that helps me understand. It helps me understand the euro. All right, so. Ooh, that won't work. Too big. So you can see when momentum enters, it's just the same thing. Momentum enters, got a gap. That's the problem with stock market, you got gaps. Okay. So, we don't give those out, Michael. Those are proprietary. What is 40,000 pips worth? Depends on whether you traded it with a micro, a mini, or a standard. A micro account would have been $4,000. That's a trading dimes. It's 40,000 dimes. That's $40,000 if you traded a mini account, which is $1 a pip. If you traded a standard account, it's $40,000. All right, but we only count one lot. We only count one lot. Most traders are trading 2, 3, 4 lots, and they're adding to their position. So even though 40,000 is basically the base, one trade for one pip, the reality is, as you saw earlier today, many of our traders, all of our traders who are trained are trading, I got 80, I got 60, I got 25, I got 40, those kind of things. Yeah, it works on anything coming on.
I taught my brother to trade. He's a stock market. He's a day trader in the stock market. He now trades for other traders because he makes so much money. He doesn't lose because I taught him how to do this, right? And he did it. Can you write down the trade? No, we're going to record them, Tal. I'm going to record them. There's going to be a link to the video, and when we get done here, we're going to have a video. We're going to show you where each one of them is going, so you can look at them today and tonight. And if you get the opportunity, you have to make the decision whether you're going to trade them or not. You know? Now, I would advise it because you don't know anything about Forex target trading to trade it on a demo, right? Or at the very most, a micro account, right? You don't know what you're doing yet, right? Yeah, but I want to go make money. If you learn to make tips, you'll make money. All you use MT4 for is what it's good for, Jeffrey. Entering a trade. Not good for anything else. That's all it's good for. Entering a trade or taking out a trade. Other than that, it's worthless. We all use MT4 to enter trades. We don't have any problem with that. It's just that you can't analyze. You can't look at multiple time compressions, which is critical when deciding to make a trade. All right? Can we all see? Let me give you an example right here. Can we all see that this currency is trying to make a move up? If the only thing you see is candles, that's all you know. But you can see this plus this. You can see this. You can see this plus this plus this plus this plus this plus this. All right? Now, if this breaks to the upside, how's your confidence going to be to take that trade? Pretty high. Why? Because the chart tells you every time compression that is traded on this chart, which is scalpers, intraday traders, and big boys, they're all buyers. There isn't any sellers here at all. All right? This little 5-minute is just showing retracements up and down. That's all it's doing. See? So when you get the trade, you have confidence to make the trade. And if you don't have that kind of information, you might not make the trade. Well, there are proprietary things that we have here, Randy, proprietary things that you can't get anywhere else. But you can learn to trade. If you learn to trade the market, it doesn't matter what trade you're on. All right. The difference is how long is it going to take you to learn to trade when you only have one chart. MT4 only have one chart. You can't collapse the time frame it takes to learn. You can't do it. You're at the mercy of the software you're using. It'd be the same way as a farmer. He has a mule in the barn and he has a John Deere tractor. Now he can plow a field with both of them. So if he decides to go out and plow his field with the mule instead of the tractor, yes, he's accomplishing the job, but he could have done it so much more efficiently, less time, everything with the tractor. Using MT4 for analysis, in my opinion, is using the mule to plow your ground. The most important thing you have is your charts. And charts that aren't any good doesn't make sense to me. Yeah, I'll show you how to use the HSI. Hold on just a minute. Let me just go over that. Makes it real easy on this chart. This chart was designed to show you Elliott waves. All right, so it's Heikin-Ashi. All right, so let's go up here to 240 chart. All right, so you can see the waves pretty easily up here. All right, so let's go down here and watch this wave from where it starts at the bottom. All right, we're going to use the HSI on the first move to the upside. It's a bottom. Okay, now let's just stop and see. Did the market know that? 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 All right, so you see, where's the wide open space? Here, 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 and they couldn't get it. So this is when retracements are very important to you. When you got a big area, retracements are the opportunity to add to the position on the rally, all right? On the dip, I should say. All right. Now we can see here we got a 1, 2, 3, 4, 5. Right? Pretty simple. All right. So every wave is measurable. All right. So we go down here, we grab this, and we say, Mr. HSI, go fetch the top. He goes them. All right. Now let's see if they know where those are. They knew that. They knew that. They knew that. They knew. Oh, go up higher. Hold on. All right, and there it is. All right. All right. So 1, 2, 3, 4. Here's 4 right here. Oh, come on. This is the last one. We make it black because it's the funeral. We can only do 3 because there's only 5 waves. Right? How many waves are in an Elliott wave? 5.
Three with the trend, 2 corrective, right? So once again, now notice we took this out, took this out, took this out, got almost there again. This time we took it out, but this one was so close they went ahead and took that out. You see how easy that is? These are the areas where we'll trade. These are the areas we'll trade. These are the areas we'll trade. These are the areas we'll trade. We won't trade that crap. Right? And it's simply a matter of going and finding out where they are. Right? Oh, thanks, Amanda. You're right. The Elliott waves are not that subjective. Right? Anil is not only is he an Elliott waver, he teaches Elliott wave. Anil does. So they're not subjective if you learn how to do them right. The problem is it's a 2-year curve to learn how to do them right and to know what to expect. Right? So let's see. Yes, looking for the hook and go. It's only on the 10-minute, which where we're looking to make the entry. We need to nail that entry. Mike, yes. Yes, amen. That's a good way to put it. But we make the entry on a 10-minute chart because we want to nail it because of the stops. The stops are smaller on a 10-minute chart than they are on a 60. Right. So the most critical thing is to make sure that we got risk covered, not reward. We know what the reward is whether we can make the trade because of risk. That's the whole question right there. So. All right. So we passed the noon bump here, folks. If we do not get a trade very quickly, what's going to happen in 20 minutes? Yes, they are, Randy. 20 minutes, London closes. All right. Prentice, I'm sure you're probably going to get an invite. We'll see what happens. It's not a beginner's class. The beginner's class we already have. It's on our website. But the main thing is you want to be live. That's what you want to be. You'll have plenty of time to watch videos. It was below 89, but it's going to depend on. It's one thing we talk about, Jim, is the real estate of the day. Being below 89, all right, okay? The other thing is where can we take the trade, all right? So, again, remember, we were watching for this one, watching for it. It pulled up in here, and there. Can everybody see? I'm going to prove to you the break, hook, and go. I'm going to take it to a 3-minute chart, all right? Now, everybody see? Here I'm on a 3-minute chart. We take this out, we do a break, hook, and go. Everybody see that? There it is. Beginners class, Prentice, we don't do them anymore, so you'll have to go to the website to get them. That's right, Sam. You have to take support out, which means you have to be below it, right like here. Here's taking support out. Does that candle take support out? No, that's testing it. That's taking it out. A break, hook, and a go. See that? Right there. Where did it go? Our target was here. Where did it go? Right to target. See that? And you know, we missed a lot of trades this morning because of all the chatter and the banner. So hopefully tomorrow everybody learns that if you do the chat and the banner, we will miss trades. If you calm down and wait till the latter part of the session, you can get your questions answered and we can try to find some trades instead of what happened today where we missed at least 2, probably 3 that we could have taken. Talk about a 1, 2, 3, 4, 5. Jerry, it's an Elliott wave. It starts at the bottom or the top of the last wave. So you got to work your way backwards and find out where the waves were so you can see where they start again. All right? Now, if you're asking that question, Jerry, I'd hold off a bit because you're not ready for 1, 2, 3, 4, 5 ABC yet. All right? You're not even close to being ready for that yet. Structure is important. Structure is going to, but structure is a bigger picture than a 1, 2, 3, 4, 5 ABC. All right? And in terms of that, that's you know, where you start is you know, sometimes I start in one place and Anil says no, it's not that, and Anil's an Elliott waver, so I pay attention to him. Right? So wide open spaces. This is where we trade. Healthy Chief. again. All right. Now we're waiting for a break and a hook. We got the break here. You know what we're talking about now. We need to square this up. We need a hook back up. Now that takes his fib out. You see that? That fib's gone then. Now we have room to this, which is this line. All right. And when you get here, you move your stop to break even. All right. That's when you move your stop to break even. You don't try to protect this. If you're here to try to make money here, you'll never make money here. Your job is to get the break even, which is usually at 17 to 21 pips. All right. Then a break hook and go here is nothing to do. You can't do anything in here, but hold on to it. When you get here, that's the critical thing. You break here, break hook and go here, you double your position because there's the opportunity. See that? See how easy it is to see it on the chart? It's so easy to see it. What do you got to do? You got to get your lines on your chart. See that? You got to get your lines on the chart. So we're waiting to see on this Aussie Chief. I'm interested in this trade a lot. This is the trade I don't want to miss, though. Right here. I don't want to miss this one. I can miss this one up here. I do not want to miss this one down here. Because that is a wide open space. All right. So let's see, where are we? Let's see, Sam, you wait for taking the support for a sell. This means the candle should close below. So yeah, but it's on a 10-minute chart too, Sam. All right, so we're going on a 10-minute. I'm up there on a 60. Get on that 10-minute chart, and you can see, here's the deal. Can everybody see the money came in? Here's the money comes in. All right, the money comes in. You had one little opportunity to get it right there. You had to be watching the chart exactly when it happened. All right. So instead, we identified this morning. If you'll recall, we said this is the trade we want. Right. But what were we doing? We were fiddle farting around somewhere else. And then we were fiddle farting around somewhere else trying to ask questions and show people that we missed this trade. Now that's okay with me because this is a training room, not a trading room. So understand that. I'm okay with that, except that you won't be because you missed 3 trades minimum today. You could have walked out of here with 100 pips or more today. All right. Because instead, we're answering questions, all right? So remember that tomorrow, all right? So let's see. I think you got that, Roger Brand. Before the room on the screen, I had a post about, okay, we already answered that one, I think. All right, and okay. Let me see, let me just check it here. Our problem right now, folks, is we have 15 minutes to find an opportunity. Why? Because what happens in 15 minutes? What happens in London? Pub time. They go to the pub. 2/3 of the world's traders leave the market. So we don't want to make a trade. We can make a trade on an Aussie or a New Zealand at this time. We can't make a trade on a pound. When is the next time the pound's going to move? London, 15 hours from now. What is the British pound or the euro move on average during the Asian session? 13 pips. All right? Making a trade on that with your next big session being Asian and it only moves 13 pips is trading suicide. Why? Because if they're trying to go down, they can't go down. They got to go find sellers. Where are the sellers? Professional sellers don't sell at the bottom. Professional sellers sell at the top, which means they build bear flags up here and then they trade off of here during the day. What happens to you? You make the trade here, you get stopped out here, and the market goes right where you thought. Why? Because you traded at the wrong time with the wrong currency. All right? This is market structure. This is what the big boys do. Trade with the big boys. Quit trading with the dumb money over at Forex Factory and learn to trade with the big boys. Learn what they do, and then you can make good trading business decisions. This is a business. We make business decisions. Business decisions based on risk and reward, not I got a moving average cost over, man, I'm in. None of that crap. We make a business decision just like you do in your business. All right? If we have an opportunity, how can we maximize that opportunity? So let's look quickly at the pound, the New Zealand and the Aussies and see if we have any opportunities there immediately. If not, we're going to close down and do a session recap. All right? All right, so you can see right here, there won't be anything until we get up to here, right? There's no room. See, there's nothing here. Right now, you can see your risk is right there. There's your risk for that little reward. All right. Now that means they need to take it up here, and they know that. So most likely they will take it up to here. We want to be a seller up here, right, for that trade again to the downside. All right. So it's not here right now. Over to the Aussie dollar. Aussie dollar, ooh. All right, been waiting for this one. All right, this is a close and reverse. Everybody see that? Close and reverse. They popped up here to find if do we have any buyers up here. They filled the orders that were there, entry orders, and there were no more entry orders. Now they know there are no buyers above this line. That means there are only sellers. So what have they done? They've done a sell. You see that? And that's what we were waiting for. Why? Because structure told us that. All right. So what are we looking for? Follow through. We're looking for follow through to the downside. All right. So let's see what happens. Go down here to the 60-minute, and we're going to see what it looks like here. You can see the twins and the exhaustion wick there. We're looking here. What do we got to break on the 60-minute? We're going to draw a line across here, and we got to go here. All right. See, now here's where we're figuring it out on the 60. All right. I know I'm trying to go down, but I can't make the trade until I take this barrier out. Taking this barrier out with a break, hook, and go gives me trade number 1 here. A break. I got to be below here. And you're going to have to break, hook, and go below the 8,700 for the next target down there. All right. Now, can everybody see that? Is that clear as a bell? You can go ahead and pop that up quick. Yeah. Everybody see it? You can enable it, Pip. Where'd you go? Hey, Pip, you there? Oh, she walked out for a second. She got dogs, so she's got to take care of it. Okay. Well, anyway, that's the trade. All right. You can see it. It's easy to see. There's no rocket science here. All right. What you got to do is be willing to wait for that break hook and go there, and you got to be willing to break hook and go here. There we go. Everybody's got it. All right. See? Now, did you see me do any rocket science? Well, I've already shown you a couple of them. Here's one that doesn't hook. Let me show you one that doesn't hook, so you'll know what a break hook is. Here's a break, hook, and no go. Everybody see that? A break below the support, and it didn't go. Break, hook, and no go. All right. That's what they look like. So it's got to be different than that. All right. So let's go find a break, hook, and go real quick. Here's a break, hook, and no go also right here. All right. That's a left behind. We'll talk about that later this week. All right. Let me get over here where we got some. Here's a break and a no-go. A break and a no-go. A break, hook, and a go. Everybody see that? You see that? All right. See the difference? That is the trade. That is sit on your hands. That is sit on your hand. Yeah, but it's bright red, man. It's going down. I'm in. Stop down again. Daggone it. Man, it's bright red going down. I got a white dot. Oh, I'm in. Stop down again. Daggone it. What happened? Oh, break, hook, and go. I'm in. Oh, thank you. Hallelujah, Lord. There it is. What's wrong? I'm not willing to wait for the break, hook, and go. Well, get ready to give them some more money. Be my guest. Or make it yourself. Make it a condition. I don't do that stuff anymore. All right. So white dots indicate money coming in on a 60-minute chart. It's basically one of these arrow and painted candles, these momentum happening on a 60-minute chart. Now, it could be because they're selling, in this case, or it could be because they're buying. That's why we only care about the ones that are to the downside. All right. If you recall, we had one this morning over on, which chart was that we had? It went right. Let me find it. I'll show you one that's happening right now. If this has got an Aussie in it, we're going to be interested. It does have an Aussie in it. Okay, see, right there. All right. White dot, money came in. Money came in. We got a set of twins, which is a close and reverse, exhaustion wick where they ran out of buyers, and there's our trade right there. Now, that's printed. All right. So we're looking for a 55 pip move from here. All right. Why? What's the fib? 30. It starts at 21, 34, 55, 89, 144, 233, 377, and so on. Right? Big boys can't make this trade because of risk. They can't make 21 and 34 pip trades. They can't. They can make that one. See, that's the first time they get the opportunity. If they have an area that's 55 pips or more, they will try to do that. Right? That's when the money comes in on a 60-minute chart. Boom. So if this breaks here, it's got an Aussie in it, I'm interested. Where? To 85.17. Can everybody see why this will be a good trade? There's my stop. There's my risk. Can I make this trade? Everybody, can we make that trade? Yes, we can make that trade. So what do we ought to do? We ought to watch this trade, all right? It's got an Aussie in it, all right, which means it can go all afternoon. Why? Because this next session is the Australian session. That's why. What's the next session for the pounds and the euros? The London. See? What's the next session for the yens? The Asian. What's the next session for the Aussie? 3 hours from now. So they'll move it all day long. So I'm interested in that. If it breaks, I'm going to be interested in that trade. So remind me tomorrow. We'll look at that and see what happened. All right. So, yeah, we're looking. No, not up. It's got to go down. Gil, has to go down. Up here in the top, you look on the left, you'll see what it says up there. G13M. All right. And that's a very strange first name, G13. So when you come in tomorrow, it would be really great if you'd put your real name in there, because I like to call people by their real name. All right. So, yeah, we got a break and a hook. So the key is break and a hook. If we get to go, bam, we're into it. There it is. Now, is there any hurry in the Forex? I'm on a 10-minute chart. How long did it take to do that? 1, 2, 3, 4, 5, 6. That's an hour. 7, 8, 9. 9 trade. An hour and 40 minutes. All right. That's all. That's the only reason we use that. Is that. Oh, yeah, that's fine if you're going by that. That's like Pip. Pip's name is Pip. That's her name. She's been going by that for 30 years, long before she does. Any comment? I'm going to go through all the currencies here in just a minute. No, it depends on the time. We like to scale in and scale out, Brandon. But we like to scale in and stay in. That's what we like to do. Scale in and stay in. All right. So we're going to go through all the currencies here in just a minute. So, all right. I'm just trying to see if we got anything that's eminent. So we know that pound Aussie is an eminent. Let's go look at the Aussie yen. Aussie yen. Oh, this is the one I was looking for. Okay. Remember I told you they're going to go 55 pips. All right. So here's the white dot that came in, all right, to the downside after the pullback. Can everybody see the break, hook, and go here? All right, let me close that and do it again. See the break, hook, and go? Break of this line, break, hook, go. Set of twins, there's the big boys, going 55 pips. That's a 55 pip target. Where did they go? Exactly 55 pips. Now, that is not every time, but it's a statistical probability. The reason is the big boys can't come in for less than 55 pips. And if you know that and you see the big boys coming in, why would you click out for 5 to 10 pips? So, all right, one more. Euro Aussie over here. We're waiting for it to pull back up, so nothing, a minute there. I'm just looking to see if there's anything that we might get to trade beforehand. Pound Aussie, I'm starting to lick my lips on that, my teeth on that one. Euro New Zealand. If this breaks to the north, all right, remember, this is breaking to the north, we want the trade. All right, it's got a New Zealand in it, all right. So, pound New Zealand, all right, still popping down, and New Zealand yen, going to target. Got it. This is the one we looked for this morning. We couldn't find a way to get in this one either. I mean, nuts. See, and by the time it happened, it was too late. All right. Notice here. Here's a dot. What is this? What's that? What is that? Break, hook, and go. You see that? All right. It's a break, hook, and go. Break, hook, and go. All right. Now notice. Momentum didn't come into right there and stop. All right. Now, if you didn't know that that was there, you would have made the trade based on the momentum coming in, and that's it. That's all you got. See, there's no risk and reward on this trade because your risk is up here. See that? That's the problem. Why does it happen so often? Because they're consolidating and they're accumulating in here. They're taking thousands of trades up and down. They got to get rid of the ones that are going the wrong way. So the way they do it is suck the dumb money into taking them. See, and they get rid of 80% of them, then they write the rest of them off on the go part. Because remember, I showed you two that didn't go. Here's one that didn't go. Here's a break, down. Here's the hook up. See that? And it didn't go. I need to go to the downside. Instead, it turned to go to the upside. But I didn't have enough sellers. See, if you understand how the market moves, you don't have to. These are not questions. All right? If the market has to have enough sellers to make that move, where are the sellers? Professional sellers will not sell at the bottom. They sell at the top. So where do you take them? Up to the top of this channel. You see, there's a known place. Right? They sell off of that. Right? Then they come down to support right here. When they break, hook, and go up here, they go to the target or at the target. Right there. All right? So there's trade number one. Again, we were answering questions because it's all newbies in here, and that's all good. But eventually, you don't want to be doing that, folks. Eventually, what you want to be doing is listening so you can go, I see that trade. I understand, and you'll be able to make the decision to make the trade. All right. So, yeah, of course they did. Put a fib on it. They do this all the time. 50% fib, boom. That's what we call the underwear trade. I'll talk about the underwear trade tomorrow. All right. Now, here's the deal. If we get a move into here, break, hook, and go, break, hook, and go here, we're going to here. What are we going to do here? What are we going to do there? I can't go over my lines, Carol. We just spent 2 hours going over my lines. You need to get here early if you're going to do it. All right? All right. We're going to move our stop. That's where we move our stop. All right? Now, don't take profit. Why would you take profit there when you know the target's here? Why would you take profit here? All right? There's no reason to do that. That's the place you move your stop. Yeah, but it could come back. Well, I'm going to move my stop to break even. So the worst that happens, I get a break even trade. But if I get it all, I'm getting from 94 down to 36. I'm getting 60 pips. What happens to traders? Retail traders? Oh man, I got 14 pips in here. I got to protect that 14. As long as you're protecting that 14 and trying to make that happen for your account, you'll never get to 60. That's it. So you can wait until the end of the week, Marabella, because we don't want you adding all the, I got to learn software now besides trying to learn a trade. We don't want you doing that. There's no reason to do that. No reason in the world. Learn how, it's not the system, it's how does the market move. All right? I was trained by 2 bankers. All right? I know how they do things. All right? So just, take your time. Enjoy this time. Man, you're in a great place. You're getting information that you can't get anywhere else. You're in a place where you're going to watch traders put this into application and see them make money. All right? So, yeah, I'm talking with Morgan about it. We'll see. He'll make that decision. So, anyway. So, yeah, but that's why you go to break even. See? All right. Nigel, I guess it's Nigel. I don't know. All right. That's why you go to break even. If they come down here and pop up here and you get a break even, you don't take a loss. They pop up here and that's a break, hook, and a go. You double your position, especially if they don't get all the way up. Then you double your position right here. So it all depends on the real estate of the day and how you attack this thing. You have multiple opportunities once you've determined where the wide open space is. Let's take this one off because they've already hit this one. Can everybody see that the target? Remember, we're target traders. Do you remember me telling this morning, if we get this opportunity, we're going to trade it down to here. And that, where did it go? Right to it. Now, you've seen me do this 6 times. I am not some clairvoyant guy with a crystal ball. I don't have a crystal ball. I don't know what the currency is going to do. Here's what I know. I follow charts. I follow charts. I don't fight charts. I don't say they got too many lines on them. That's like telling Mozart he's got too many notes on his concerto. All right? I put the lines on that make sense, that allow me to find the wide open spaces to be successful. If I get lazy on the lines, I'm going to lose money. All right? That's it. So, you put the lines on. You're in charge. That's how you do it. All right? All right. All right, so I'm going to close this down, and we're going to go, wow, we've been going 3 hours. Holy cow. All right? So I'm going to close this down, and we're going to do a session recap. All right? So, in this session recap, Morgan's going to put up for you guys. You need to pay attention. All right, so I'm going to start on the euro. This is a
Session recap for the 3rd of February, okay?